Oh, good morning, my Teaser King family. Today's today's lesson is going to be more on economics, but if football comes up, I'll be happy to answer. I do some thinking, so I go swim and work out in hot tub. They have a little health club around here. And I talk to the people in the hot tub when we're just, you're sitting there, and I don't get people. I'll tell them, well, you need to buy gold because the dollar's collapsing. And I take it, then I'll see a guy a month later or 3 weeks later. Next time I see him, well, did you buy your gold and silver? And they'll go, no. And I'm like, okay, I feel like a team when you go on fourth down on me, like, oh, you don't respect me, you don't trust me, or what if I'm telling you don't drink the water, it's poison, and you still drink the water, then you're not listening to me. And I see this with a few things, not football much, because I don't tend to talk football with these guys. Not all of them bet, but I know money is important, the economy is important, and everything else. So I saw this guy yesterday, and I had talked to him about gold and silver, and he's kind of leading me on, like, yeah, I'll buy some. And I go, did you buy any yet? And he goes, no. And I kind of I'm trying to figure out what part of the way I'm explaining it or the way people are that they don't listen. And so I don't understand it. I don't get it. I'm telling you the dollar's collapsing, but that's where they don't believe me, right? Well, the government will take care of me. They're so brainwashed that they don't understand and comprehend what's really going on. They listen to what's on the propaganda on the news or whatever. Or, well, my whole life I've been, gold doesn't do anything because they don't understand COMEX. So this is what I want to talk about today. So to talk about it, we're going to go back to the beginning, and I pulled out. So these are my economics notes. So the first thing I wanted to talk about was what is economics, right? Let's get to the beginning and then we'll get into it. So economics is just the economy. It's me going to the grocery store and buying things, which then leads to everything being an auction. Prices are set. You go look at a steak, it's $20. That's the auction, and you either buy it or you say it's too expensive. That's why you need prices, right? So prices are information. And I know I can I'll use my Canadian club. So Canadian club says, well, what can I get? What's the auction say? I put it for $50. People buy it. Okay. What does it cost me? $25, because I'm going to make a whole shitload of it. But I got to buy a whole plant and I got to make 1,000,000 bottles, but per bottle it'll be $20. But I got to sell 1,000,000 of them. That's what the market is. So then we get into, okay, do I buy it or not? So as the consumer, what do I want? And that's where Say's law comes in and says, you make what people want. That's what a market is. And that's really what you have. It's really what the whole thing's about, right? And then how do I pay for everything? Well, I use money. I use something. I'm not sure what it is. It could be pens. I could use pens, but I got to have something that denominates. So we've come up with money, which is gold and silver. But it's restrictive. The government, the U.S. government, doesn't want us to have it because they can't inflate it. What's inflation? Good question. See, so everything leads to a thing. There's 3 types of inflation. Well, first of all, inflation is fiduciary credit inflation, which is the most dangerous, which is when the governments print money to cover their deficits. So government has expenses like we do, rent, everything else. So if the government prints money to pay for it, as opposed to getting it in the economy, and me buying more steaks or chicken or clothes. The more they print, then it hurts the value and it gets devalued. So why they don't use gold is if they go to war or if they want to be crooked like they are, they print it, because you can't print gold and silver. That's why gold and silver are such big asset, and they're assets because they're real, right? And they have a value, like a painting, like a Rolex, like a car. A car is an asset, but it loses value because as you drive it, it wears out. But an asset is a building, a land, a house. The shirt, this is an asset. So you have three types of inflation. You have what's called demand pull inflation. I don't want to get too technical on you. This is when money supply increases faster than prices. That's what's going on now, demand pull. So prices raise inflation rates. So as you print the money, you're printing, but the prices aren't going. The other type is, it's called cost push, which is money supply equals prices. So you're printing and the prices are going up. And then the third type, which is the worst stage, is this cost push. Worst step is hyperinflation. Money supply increases, prices increase faster. Expectations drive the system. So people think there's inflation and will go buy more stuff, and that will drive the price up. Hey, William, it's all supply and demand. Well, you like to think it's all supply and demand if it's free market and they let it go. I agree with you. What I'm trying to get to is when it isn't, and that's what it should be. And then we'll describe the difference between the Austrians and the Keynesians to get you that. And then why gold is not supply and demand, right? That's what it should be. So if the demand is for the Canadian club and I'll pay you X, that's what they make it for. But with inflation, because the dollars are worth less, they push the price up because it takes more dollars to buy it. So what the inflation does is ruin the dollar. Okay. That's what's happening now. When Biden prints $10 trillion or they pass a $5 trillion, how do they pay for it? Where's the money coming from, right? You can't just produce it out of thin air. If you do, there's more money in circulation than goods and services, so it then loses value, which is what's happening. If you're young enough, it's a great buying opportunity to buy the S&P 500 index. Don't bet against the U.S. It's a bad bet. Well, okay, we'll talk about that. So as the dollar loses value, what happens is the prices really don't go up. It just takes more dollars to buy it. So when they do, like Star Wars in the 70s was the highest grossing movie, and then it became something came out, Avatar or one of these other movies, and it's a lot higher. And then they go and say, well, inflation adjusted Star Wars really made billions of dollars, not the millions of dollars. What is that? So does that make sense to you? Wait a minute. So why is that? Why, when you watch a TV show from the 80s and they go buy a hamburger and it's $1.50 or pop is 25 cents? I watch Hogan's Heroes in the 60s, and there's a spot in the show and it's like, oh, no, a Coke's 10 cents. Okay, that's what the value of the dollar, that's what the price tells you. So the price is that's the auction. How much can I sell it for? You're talking not a day, month, or year. It's years. The Fed is raising rates. Okay, well, we'll talk about all this, Williams. Not a problem. I like the communication. Please ask any question you like. That's what I'm here for. I'm here to explain what's going on and explain economics. So what you had, now I have a master's in this, just FYI, so you understand it. And then these are my notes from my master's class. So people don't think this is like I'm way off in left field. I don't know what I'm talking. It's just a guess. No, this is from an Austrian economics master's class. That's why I put in my master's level classes, because I have a master's and that's what I learned. So I'm going through the notes that I was taught. So therefore, it's not my opinion. This is the facts of what's going on. I've learned from Adam Smith. I've learned from, I can't think of the names right now. I'm drawing a blank. But a lot of the Hayek and those, and they have the Austrian view. And really, what it is free market. What happens in communist Russia or China, the government controls everything, and they don't use the system I'm talking about, where they're not using the auction system. Let's call it an auction system, free market, which means I can sell anything I want, and if you want to buy it, you do. If I want to make Canadian Club $500, will you buy it? So I can make it 500, but if nobody buys it, it's not, then I can't sell it because the auction and the market says no. Well, what you have in the communist countries or the socialist countries is they don't do it like that. They'll come out and say it's now in Russia, like for vodka, they'll say, oh, it's $2. And they want people to get drunk, and they want people to get sick. I mean, it's just the way of life there. That's why everybody drinks vodka, because it's cheap. So it's all prices. Now, the difference is the communist socialist way wants the government to run it. We want the free market to run it. That's Adam Smith. He says, let the market determine everything. You put something out, you figure out what the market wants, blue shirt. You then set the price and see if people want it and will pay that price. It's all an auction, right? It's just like football. You have, well, let's look at a game this week. We got San Francisco 6-43 over Atlanta. That's an auction. You either take Frisco or you take Atlanta, or you go over or you go under, and you figure it out, and then you make the bet accordingly. And what I do is take it to the next level and go, well, let's tease it. Let's take the 49ers even, or let's go under 49. That's a great bet. I'm going to lock it because I really love it. And then we see what happens. And that's the free market. That's an auction in football. There's auctions in everything. You want to go buy a car, it's an auction. Toyota Camry, $30,000. Do you want to pay for it? No. So the money and the prices dictate the whole economy, right? That's what happens. In socialism and communism, they don't. The government sets the price and sets the product. So if you want a blue shirt and they don't make blue shirts, you can't get a blue shirt. So that takes me into so now we got two types of economics. We got Keynesian and we got Austrian. What the hell, Howard? Isn't it all the same? No, it's not all the same. I'm not sure. Donald Trump kind of set this going. Biden's spending more, but Donald Trump really, I don't know that I like Trump. I know I don't like Biden because he's basically a communist, right? He wants to be a dictator. He wants to control everything. He wants to tax the hell out of us. He doesn't like free market. So I don't like people that don't like the free market because it's the only thing that works. We've already seen Russia collapse. The Chinese are collapsing. Everybody's collapsing because it's all socialist. That doesn't work, and it's been proven it's never worked. Even the Roman Empire had free markets. They collapsed when they inflated the currency, and then they became more dictatorial. Look at Hitler. He tried to run everything. He taxed people. He killed people. That didn't work. Biden is awful. He's the worst I've ever seen since FDR. FDR, I think, was the worst because he really fucked things up. So let's look at Keynesians. So what's a Keynesian? They limit the output. the output goes up, the prices go up. They don't like savings. Savings is a leakage. It hurts the economy if people save, which is wrong. That's not true. Inventory comes from spending. They believe if savings go up, then consumption goes down, then investment goes down, and output goes down, and income goes down, and savings go down. That's the view of the Keynesians, which is what America is. For some reason, people don't understand it, but like it or follow it. The Austrians say if consumption drops, savings go up, which lowers interest rates, which increases profits, which increases investment, which increases output and increases income. So under the Austrian rule, it's free market. You should save because the banks take that money and loan it out to businesses. So if me and you want to open up a business, we go to the bank. If there's money in there that is being saved, then they loan that money out. They can't just make money, but they loan it out. So me and you want to open up a t-shirt business, we go get a loan from the bank, we open it up, boom, 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 we figure out the auction. Well, what do people want? Okay, they want blue shirts. Okay, how much? What's the market say? What does the auction say? Oh, $20. You can buy the shirt for $20. Oh, okay. How much can we make it for? We can make it for 10. Okay, great. Let's do it. We're going to make it for 10. We're going to sell it for 20. We're going to make $10 a shirt. Boom. We get big. We go on the New York Stock Exchange. People buy our stock because they see that we make 50% on everything we sell, and we sell 1 billion of them because the market says, I want this shirt. Say's law. You bake what they want. That's it. It's an economic law. So let's see. I'm trying to read my notes. No, I'm not really sure of that note. Keynes wants a mature economy. No more can be invented. Demand side economics. Overall structure of the economy is a black box. This is what Keynes says. Homogeneous. Keynesians, labor plus capital are all the same. Well, we know that's not true. The Austrians are heterogeneous. All capital is different, right? So everybody makes different things. Labor and capital is not the same. That's the different. History of economic thought says there's land, there's labor, there's capital, there's information. That equals productivity. There's two types of goods, production and finished goods. So your WIP and your finished goods. Production goods are consumption goods, capital goods. Those are capital goods, and then consumption goods are consumer goods. Then we get into a few other economists here. Price system. Prices are signals. 4 functions of prices. Allocation of resources to most highly valued use. Guide to resources or production. Savings and demand and future production. That's what prices are. That's why we need them. But that's what's happening when you inflate, as what we've just discussed. You are printing more money and you're making the dollar worse, which now makes you don't know what the prices are because the prices are not in standard dollars. So what's happening is the dollars are now being manipulated. The government becomes corrupt because they take bribes. So when JP Morgan wants to be the only one selling steel or oil or whatever he sold back in the 1900s, he did 2 things. He bribed the officials and he wanted a monopoly. He didn't want competition. A monopoly is when you have no competition. Let's see, what other wonderful notes do I have? So that's what happens. The rich then want monopolies because they don't want competition. Because if there's no competition, now I can sell this shirt for $100 and I know there's demand for it. The market might not demand it at, they might demand it at 20, not 100. But if I get rid of my competition and people still want blue shirts, they have to pay more. It's more in energy and banking where you have the monopolies, or look at the phone system, right? With what was it? Not AT&T or something like that had the monopoly on the phone. And what did they do? They broke it up because you want competition. It's good for us. It's good for the consumer competition. It's not, if I'm a business, I don't want competition. I want to be the only one. And that's what ends up happening. So what the Keynesians want is the government to get rid of the monopoly, to get rid of savings, keep interest rates low, and this is all we're going to make, right? And the government runs it. That's what Keynesians are. That's why Keynesian economics doesn't work, because it's not allowing the free market to live. It's not allowing the auctions to happen. They're taking away our savings, and then they basically take away our liberties and the markets, right? So if there's no competition, so that's what, if you notice what they're doing is they're kind of getting rid of the little guys, the restaurants that went out of business, the small restaurants, not the bigger ones, not the McDonald's, but the Joes and the Frans who are mom and pop, who have their little restaurant, who get in 20 pounds of hamburger to cook, versus the Wendy's who buy a lot. And they got rid of this. That's what this whole thing was about, was getting rid of small businesses. And you can see it happening in other areas where they're getting rid of the small business on purpose because Keynesian doesn't like it. This is the problem with Keynesian. It's government run. Now, guess who do you think brought in the Keynesian? Mr. Keynesian was brought in by FDR. And I have that note somewhere, but I'll take a look. So he brings it in. What do we have? We have a depression for 10 years in the 30s because they raised tariffs and taxes, and they take everybody's gold, and they just, they basically fuck it all up. And if you just let the market run, it already had corrected itself in 1930. The reason you had the stock market crash in the first place was all the inflation of the 20s. They printed to boom the economy, held the interest rates down, and eventually it comes back to haunt you, and you have this inflation, and again, it busts. So the companies are living a fantasy where it's cheap money, so they're borrowing, but they don't have enough Canadian credit. They don't have enough, well, what else can I make? Well, I don't know, but I'll borrow more money. But why? You don't have a product to sell. Oh, we'll borrow because it's cheap. And then it's a loan and it's debt. Eventually you got to pay it back, and you're not making sales because you don't have another product. It's called malinvestments. And that's what happened. And in 1929, the market crashed because of all the inflation. Does that sound familiar? Does that sound like something happening today? You have massive inflation. The stock market will crash. Williams, to talk about your question about the S&P 500, I would not advise to be in the S&P 500 now, because the shit's really going to hit the fan, because this is worldwide. And companies are going to lose their ass. There's going to be massive depression, and people will lose. So let's say the S&P, I don't know what it's at. I know the Dow, let's talk the Dow. The Dow's at what, 29,000? I don't know why it's close to that. It should be about 10,000. But it took quite a long time for the 1929 crash to get back to where it was profitable. I think 20 years. And if you look at the Japanese stock market, they've been printing, and they crashed in the 80s. That's why their yen is 144 to $1. How bad's their system? And their stock market's never recovered. So When it crashed in 89, it's still not back to where it was. So I'm going to disagree with that. In a normal situation, I would agree with you. Okay, the market just crashed and it'll come back up. However, we have to understand why it crashed so we can understand why it comes back up. And it's crashing for a whole different reason this time, because the dollar's collapsing. So, Howard, why is the dollar collapsing? Because these idiots are printing it like it's freaking water. So, what is money? Money is a medium of exchange. You work for money. It's a store of purchasing power. You spend it over time. It's a unit of account, measurement of account. Common denominator, made or lost money. The function of it. What is a medium of exchange? Now, this is where I argue with the Bitcoiners, but they don't want to hear it. Medium of exchange has to have 5 things. It has to be portable. So a little bit does a lot of work. So that's why we have $5 bills, $10 bills, everything. It's got to be scarce and high value. Overabundant loses value. Is the US dollar scarce? And has it, overabundant, lost its value? Yes. Is it divisible for small exchanges? Yes. Fungible. Everything is the same, replaceable. The dollar is a dollar. Acceptance. Is it accepted by everybody? And durable. Valuable equals most marketable commodity. So is the dollar durable? So when you go through Bitcoin, is it portable? I can't accept it. Is it scarce? I don't know. Maybe it's 21 million. Maybe it isn't. But how many Bitcoins are out there? Is it divisible for small exchanges? No. There's a Bitcoin worth, what is it, 19,000? I guess I could get it, but then what do I do with it? I can't spend it. I can only spend it at a place that'll take it. I don't take it. You can't pay me in Bitcoin, and I don't want it. Is it fungible? Everything is the same. Is it replaceable? I don't know. Is it acceptance? No. Is it durable? No. Why is Bitcoin gold? It's not. Why is Bitcoin a medium of exchange? It's not. Gold has all these qualities, right? So gold is portable. I can put it in my pocket. It's scarce, very, very scarce. Is it divisible? Well, it was back in the day. There was a $50, a 20, a 10, a 5. Like I have an ounce of gold. I have a quarter ounce. I have a half ounce. I have a tenth of an ounce. So if prices were priced in gold, and it was either priced in a tenth of an ounce or a quarter of an ounce, you don't make the price 99 cents. You make it a tenth of an ounce of gold, a quarter ounce of gold, whatever. And therefore you don't need the change. The change is because we use a dollar, right? We got all these pennies. So people market there. Okay, so I do Teaserking. So I'll tell you what, you want the week, I'll sell it to you for 3 ounces of gold, which is about $100. You want the week, give me 3 ounces of silver. I apologize. If you want the whole year, I'll make it a half ounce of gold. How about that? You want a month, a quarter ounce of gold. So you start pricing it in what the gold or silver is. So it is divisible for small exchanges. You just have to change your pricing around. Fungible. Everything is the same. Gold and silver are all gold and silver. There's no fake gold and silver. Is there acceptance? Everybody loves gold, except for a couple strange Keynesians here who are against gold and want Bitcoin. And is it durable? It's indestructible. That's the beauty of gold. Value depends on judgment. Money is the most marketable security. The market decides that money is marketable and valuable. So the market, our auction place, is one saying we'll take money. So when you come in and I make, I make hamburgers, I'll take money to sell you the hamburger. And then I need more meat, and they'll take money so I can buy more meat. So the money works out. However, if you abundance the money, as they're doing now in every freaking country in the world, you lose value. And that's what happens. That's what inflation is. That's the problem with money when it's fiat and these idiots are printing it. They're missing the whole overabundance loses value theory. They don't get it. Now, this isn't my theory. This is the Austrian view. What are the Keynesians? We'll just print more, right? So the Keynesians believe I'll print more money. Oh, you got a car payment, we'll print money and pay for the car. As opposed to you go to work, somebody gives you money, you take that money to pay the car. Then it's fine. But when you just print money, so it's the government. They're what, $30 trillion in debt. Oh, we'll just print $30 trillion. Wait, your overabundance, you're losing value. That's the part nobody gets, right? That's the big, most important thing in this class. You have to understand, you print too much, it loses value. That's why they say every fiat currency, which is what this is the faith of government. I believe in government. You're just saying Biden's awful. I agree with you. I'm not quite sure that I'm not sure Trump's the Greek god either, but he's stronger. This war would never have happened if Trump was in office. Now, I don't know if he'd have negotiated with the Russians or what. And I don't know we don't really know what's going on behind closed doors. Is Biden going to Putin saying, yeah, it's okay. You can do it's okay. It's all part of the plan. We're going to take you off of SWIFT and you're going to come up with this currency and you're going to back it with gold and silver. And because we want to blow up the dollar, because we want to make it Keynesian where we want to control everybody. And we'll have a digital dollar. Oh, Pete, you want to go to Hawaii for vacation? No, I don't think so. You want to go this place for dinner, this travel? No, they're going to say yes or no. Oh, do you have the vaccine? No, then you can't use it. They want to control us, as this is what communism is. This is what the Keynesians believe in. And this is what they're trying to drive us to. And this is what scares the hell out of everybody who really understands it. Vanilla. Hi, Vanilla. I missed some of Silver Talk. No, I haven't talked silver yet, but we're going to talk about it. Right now, I'm explaining what the economy is, what money is, what the free market is. And I'm explaining it as between Keynesians and Austrians. So Keynesians are just socialists. The government's going to control you and run everything. And we don't want any unemployment and boom, boom, boom. And they cause this real bad situation because then it's control. You can't smoke. Free markets, absolutely, Williams. Free market is what works in Rome. When Rome was successful, they had free markets. They had gold as currency. As soon as they got rid of the Republic and they started having Caesar, and then I was watching Gladiator, that moron, then it started to collapse because, the government will take care of you. We don't want you to think. We don't want you to develop. We want to get rid of the market. And it just collapses because why did Rome go out? Because they inflated their currency and ended up having the money not backed by gold. It wasn't the inflation we're doing where we're printing. Their inflation was getting rid of the gold out of the dollars and they replaced it with copper. Well, what happened? Who got the gold? Wow, the Germans got the gold. What did they do with the gold? They paid the soldiers. Because guess what? Soldiers are in control because of the military, and they will not work unless you pay them in gold. They will not take copper. The Germans had the gold. They worked for the Germans because they're soldiers. They don't care who they are. So they went to work for the Germans and they invaded the Romans and they won because the Germans paid them in gold and the Romans didn't have any more gold. That's why it collapsed. The inflation, and then the warriors got paid in gold by the other team, and they just went in. And then you're not going to have a military without money, and gold was money. So even back then, they knew gold. So at this point, this is what's happening. So it's got to be that. So what is money? There's two values, use and exchange. Specie money, which is gold or silver, is actual currency, gold coins. Deposit with the goldsmith, money was the substitute. Money is the substitutes like your checkbook. Two names on it, you and your bank. A money certificate is 100% backed by gold and silver. Those were the silver and gold certificates that you hear about in the 20s, where the dollar was actually said a silver certificate or a gold certificate. So you could go to the bank and say, give me the gold for it. Fiduciary money is acceptance of truth, word of honor based on a witness, checks, two ways. There's observation and there's faith. You believe, it's a leap of faith, a trust. These are produced by bank. These are fiduciary money. And the worst is the fiat money. Let it be. Fiat money is produced by the government. So we have to trust the government. Do we trust the government? I can't trust them. I can't believe a word they say. They don't do anything for us. All they do is for them. They print money to buy stocks. That's what do you? You're the government. You're supposed to represent and lead us. And now the questions are, even why is there a government? We do need somebody to lead us, but I'm not even sure if you do, because if you have the free markets actually working and gold in place, you'd probably not need a government. You'd probably just govern ourselves. I come in here, I sell Teaserking, right? I got buyers. I don't care. As long as they have money, I don't judge anybody about anything. I don't care anything about them. Just, you bought, I want to make you money, and I'm blind to whatever they are, whatever color, religion, race, whatever they are. I don't care. I want to help them. That's the free market. So therefore, as long as I get customers who come in, I don't need the government telling me what to do. I certainly don't need to pay tax on this, and I certainly am trying to educate. Now, it's up to me if I choose to charge for the class or not. I choose not to charge for the class. I do charge for the picks because you need the picks to make money, and therefore that's really my business, but I'm happy to teach like this. So I'm happy to educate. But I don't care who I'm educating. I don't know who, I'll learn you, or we can talk, or we can email and all that, and that's perfectly fine with me. But I'm blind to it. So we don't need a government telling me what to do. All they do is get in the way. We want me to run my business. That's how you run a business. Let's see. Okay, now here's something that'll really freak you out. The worst investment for a bank is real estate. What do you mean, Howard? Look at BlackRock. All they do is buy houses. Because it's long-term. Savings accounts are short-term. Real estate is very risky. Fluctuating interest rates and trade cycles. This is why you don't want a bank to own a house. This is why I don't understand BlackRock buying the housing market like they think we'll corner the market and we'll sell everything, and then you'll have to pay $100,000 a month for rent, which you won't get. And then you're going to hold the houses. You're going to have to pay tax on the houses. You're going to have to keep them heated and cooled. It's going to cost you money, but you're not selling them at market. You can't force the market. The beauty of the auction is if you go to the grocery store and they sell steaks at $30 a pound, nobody buys it. The market says no. And that's what I say about us being the market. So when I go to Boneyard, to my barbecue place, and the guy sells his ribs for $30 for a slab that used to be $20, and I go to the owner and ask the guy I do my silver with, and I teach him economics, I says, don't make it 40. If you make it 40, you're not going to sell any, because we're trained at 20. I understand what inflation is and the value of the dollar dropping, but I'm still not going to pay. I know I'm limited then, right? I only have so much dollars, and I can only afford so much when I go out to eat or when I go to the grocery store, my clothes, because my rent's going to be there. My utilities are going to be there. I got to go buy gas so I can go to work or drive around. I need clothes. And then, so I only have so much money. But now if I'm going to have to spend another $10 on a slab of ribs, I don't want to spend $40. So I'm teaching him economics. I'm teaching him what the market is and what the auction is. And I'm saying, we're used to paying $22 for your slab of ribs. You made it 29. You're pushing it, but it's still under 30. As soon as you hit $40, you're not going to sell one slab of rib. It's not going to happen because we're conditioned at 22. And he says, well, what do I do? I'll have to close my doors. I go, you damn right you'll have to close your doors. That's why I'm saying if the costs go up and now he's got to pay $35 for a slab of ribs, he shouldn't buy them because he's not going to be able to sell it because guess what? Our market says Canadian club's $50. If the cost goes to 60 and you can't sell it for 70, you can't produce it because your costs are over what the market auction says. And that's the key to business. And that's why the stock market's going to go down. And that's why we all are in trouble. And that's why I'm telling you to buy gold and silver. They will hold the value that the currency won't, the dollars won't. And good luck if you want to buy euros, Swiss francs, or British pounds. They're all getting their ass kicked. Yen's going out. So all these countries are doing Keynesian economics. And the question is, what the fuck are they doing? And why would they follow this losing system? It's sort of like betting on the Detroit Lions to win the Super Bowl. They never will. They are badly managed and badly coached, and they have terrible players, and they lose all the time. Why are you betting on them? Why don't we go bet on San Francisco or go bet on Kansas City or Buffalo? Let's go bet on the team that's winning, not the team that's losing. So why are you following Keynesian? Keynesian has never, ever worked in the history of life. It can't work because it gets away from free markets. The government runs things, not the individual. We want the individual to run it. We're going to make the best decision. And we don't want to be taxed to death because I'll determine I don't want to spend the $40 at the boneyard and buy the slab of ribs. It's too much. I'm not going to do it. The government will tax the hell out of us, and they'll just spend money. They're not going to do it right, and they're all stealing it anyway. So they're just taking our tax dollars and stealing it. That's why they are off the gold standard, because they don't want to be restricted. If I'm on the gold standard and I can't produce gold, I can't make it. It's there, right? It's dug up out of the ground. I don't know if meteors came and, like Tokyo said, they came to Earth and all this gold, and that's what they dig up, or they're asteroids or whatever it is that there is. That's what it is. Talk about limited. You got 21 million Bitcoin, maybe, nobody knows, of something that you can't hold or not everybody wants, and you need an account to get it. And then how do you get rid of it? So gold's there. That's the point of it. So governments don't want to be restricted because they're all assholes, because they're crooks. They want to get the money and print it and put it in their bag. Why does Biden have like 10 houses and he's like a multimillionaire from being in the government his whole life, where the salary is probably 50, 60,000? I make 50, 60,000. I make more than that, but I don't have millions of dollars and 10 houses and everything else. It's just very, very fishy what's going on. They're killing us. They're just screwing us. You go make the money and we're going to steal it from you in taxes and inflation. People call inflation a tax. Well, what do they mean is it's not really a tax. It's hurting the value of the money. So maybe they're saying like a tax steals money from us. So when you make $100,000 and you got to pay 10,000 in taxes, why? Why are we giving the government 10,000 of our money? So they can run what? Schools, which they run into the ground and they're all socialist. Roads, they're horrible. Or what else? Or they're going to regulate us, or we need IRS agents to make sure we get the tax. Well, how about if we just stop the taxing? Let's just do a sales tax. We don't need the IRS. We don't need to spend billions of dollars, and we don't need to harass and try to control everybody. That's what this is all about. It started with smoking. Oh, it's bad for you. Secondhand smoke. You can't smoke. That had nothing to do with smoking. It was control. Oh, we can control the people. So we're going to get them used to being controlled. And it was seatbelts. It's always about safety. It's about, oh, we're going to do the education. Your kids are stupid, but we're going to brainwash them into believing socialism. There's so many young kids I see at the pool when I start talking economics, and they're all freaking Keynesians and socialists. Oh, socialism works. Look at Canada. Yeah, let's look at Canada. Where's my Canadian buddy? He's not on. Does it work there? Absolutely not. They're in big trouble too, because the free healthcare costs a mint. They don't have enough money for it, so they end up not doing half of it. My uncle died of the kidney failure because it wasn't free. I go, well, you get. He needed it, and I said, well, it doesn't matter. It's free for you. He says, it's not free. Just the basic medicine's free. If you want to get the kidney, whatever, I can't think of the word. If you want to get that done, it costs you extra, and you got to schedule time to go in and do it. And of course, he died shortly after. And it's a shame, but when government says they do it for you, they don't do it for you. They don't do anything for you. And then they hide behind everything. Oh, Kennedy was shot by Lee Harvey Oswald. He was shot by the CIA. Many people have proven that, and many people have proven there's no way Oswald could have fired 3 bullets, and there's no way from his angle he could have shot him from the front. There's so many holes in the story, but what does government do? They just lie. And they lie about everything. So you can't trust them, which makes the money not trust. Oh. Who owns the Federal Reserve? J.P. freaking Morgan. How does he have a bank and own the Federal Reserve? And then he kills the gold price. Why is the gold price and silver price down? Because it's not an auction. It's not at market. This is what I tell you. So gold and silver are done by derivatives, which means I'm going to sell you 1,000 ounces of gold, only I don't have it. Wink, wink. And let's drag the price down, because we want a monopoly. So we're back to monopolies. We want everybody to buy US dollars. We want to trap everybody in US dollars. We're going to inflate it, and people are going to lose their ass because we want to control them. And I don't know where this is coming from, where this is taught, where this is learned, and why it's in effect now. But that's what they're trying to do. So what did they do? They kept the price of gold and silver down. So what does everybody say? Oh, I don't want gold and silver. It doesn't go up. It does go up, but all they use is the derivative market, COMEX, which is not real price, which is why I keep saying it. So when I tell you COMEX at 1,700 is not the real price, it's because they're selling ounces of gold and silver that they don't have. I'll sell you 1 million ounces of gold. You don't have 1 million ounces of gold. And the price goes down because they're selling into nobody wanting to buy it because it's not real. It's a game they're playing. It's derivatives. It's not the real fucking price. It's not the auction. It's not the free market, as you're telling me, William. Exactly. I agree 1,000% with you. So they've gotten away from the free market. There's huge demand for gold, but the price doesn't reflect it, and silver. And this is why I say to buy it, because what they're doing is they're driving my Canadian club down to $2 a bottle, even though we know it's 50. They're selling 1,000 or 20,000 bottles that they don't have to lower the price. So now I can get it for $2. Only I can't really get the bottle. I can only get the derivative, which says it's $2. But if you buy physical vodka or whiskey, it's, you're going to get it at $2 because they're pricing it in this fantasy land COMEX that isn't real. This is why I warn you about these idiots on YouTube, the Rick Rolls, the Rick Hertz, Peter Schiff. All these idiots are just scammers. And this Sprott, SLV, and this GLD, it's all fucking bullshit. It's not market. They're all doing paper derivatives. That price isn't real. If you own this Sprott or SLV GLD, this guy should be in jail. This Sprott guy for selling pyramid scheme. He's selling it without real gold and silver. He's selling it as if it's a physical, that you're actually buying physical gold and silver. He's totally lying to you. It's not real. You're not getting any gold and silver. You can't take delivery of it. So if you bought what you thought, oh, I just bought 100 ounces of gold on this ETF, you didn't buy anything. It's not real. He doesn't have it. If you want to buy gold and silver, you go to the coin store that I show you or one in your area and you buy gold and silver. You buy the physical fucking coin. I buy a cup. I didn't like, oh, I think I own a Bellagio cup, but I really don't. You buy the cup. You buy the shirt. You go to the store, you buy everything. You buy the mouse. Who buys it? Well, I really didn't buy the Canadian club. I bought a paper Canadian club. I really can't drink it, but I bought it and I own it. These people should all be in prison, and these people that report on it should be in prison because they're misleading everybody. They're lying to everybody. And when they say, well, gold might hit 2,100, those people should be put in jail because they're misleading the public, and I hate that. I am here to be the truth. I am the professor. I am telling you what's really going on. And what's really going on is you need to own the physical because that's the real market. Now, as I say, with gold and silver for you, Benila, because the demand is here and the price is here. I'm telling you to buy it now because you're not. I went into the store yesterday. He had 3 ounces of gold is all he had. He had a maple leaf and he had 3 of these Buffalo US and then 3 Eagles. And a guy comes in and I told him to buy the maple leaf because it's $100 cheaper and it's an ounce of gold. All we care about is buying an ounce of gold. So he bought the ounce of gold. He bought 2 Eagles. There was 3 Buffaloes left, which I don't know why I'd buy the Buffalo I'd rather have the Eagle. And he had no silver. And I bought the 10-ounce bar I showed you yesterday because he had no coins because they're not making them. And that's what I'm warning you about. That's my whole warning. The market is not set. So we've talked free markets. Let's get into supply and demand. But in the free market, the demand for gold. So if let's do my whiskey. If the demand was off the shelf and 1 million people wanted my Canadian club, which they should, it's delicious. If they did, and the price was $50 and they couldn't keep it on the shelf, what do? They raise the price because I got demand. If my demand is higher than my price, I raise the price. You can do it. That's the only way to do it. So when I say to go to the grocery store and steaks go to $20 a pound, if there's not demand for it, they can only raise it to 20 if the demand is there. If they're selling out of steaks. So New York strips, $9.99. Everybody comes in. They ran out. They get more. Everybody comes in. Hey, we can raise the price because people want this. Then you can do it. If you just go against the market and make it $20 for the pound, but the auction isn't $20. The auction's, I'll pay you $9. I'm not going to pay you $20. What happens? They're sitting on it. Nobody's going to buy it. They have to reduce the price to equilibrium, which is basically what is the market going to pay? That's what I can charge for it. That's the whole point of economics, Austrian economics, the market. You want to be in business, America. That's the whole point. I can only sell it for what people want to pay. But if people are willing to pay $100 for the steak and it's 10, guess what? It's going to walk out the door. So if you see steak on sale for $6 right now, or I'll see at my place, I'll see hamburger, they give you a discount if you buy 3 pounds, and I'll see it down to $4. I buy give me 9 pounds of it because it's underneath where I'm willing to pay, and I know what's coming. So I'm freezing it all to use later when prices go through the roof because of the fucking inflation that's happening. As they're printing the money and ruining the value of it, things get more expensive because it takes more money to buy it. Bonilla, is one better than the other in regards to the coins versus the 10-ounce bar of silver? Absolutely not. 10 ounces are 10 ounces. by the way, does he still have more silver? I am looking to get silver next week if he has. Well, he had the bars is all he had, or he had Eagles. Now, the difference was he had a 20 container of Eagles at $35 an ounce, or the bar or these Buffalo coins, which he ran out of, was only $4 over spot. So those were $23. There's no reason to pay 35 for the Eagle because you're buying an ounce of silver. An ounce of silver is an ounce of silver. When the silver goes to 2,000 an ounce, oh, I got an ounce, that's 2,000. If it's an Eagle or a bar or whatever, it's all the same price. You're buying the metal. So for your first question, no, the 10 ounce bar is the same as buying 10 coins. The difference is, let's say you just need one coin and you go to the grocery store and you got the coin and you're going to go grocery shop. Then 6 months from now, silver is going to be 2,000 an ounce. So you go to Kroger's and you want to buy your groceries. You only want the 1 ounce of silver versus the 10 ounce bar. The 10 ounce bar might buy the Toyota. So that's something that you're going to like let's say, so silver's 2,000 an ounce now. If you have one coin, it's 2. If you have the 10 ounce bar, you have 20. You have 20,000. So do you really, but it's okay as long as you have some of both. It's okay to buy the bar. So does he have more? He's supposedly getting it in. It's 4 weeks out. My friend who bought $100,000 worth of gold wants $100,000 worth of silver because I told him silver is going to jump to the moon because it's been held down. The demand for silver is here and the price is here. So it's got to catch up. And then gold and silver, the gold price is here, the silver price is here, but it's normally here. Gold's usually 6 or 7 to 1. So 7 pieces of silver buys the gold. Well, now 7 pieces of silver doesn't come close to the gold. So the price of silver is going to go from here to here. So that's why you need to buy gold. Silver, it's so fucking cheap. And we all know where it's going because of this massive inflation. And the fiduciary, I have faith in the government. Nobody's going to have faith in the government. They're going to say, I don't want it. It's already being done by the BRICS countries, Russia, China, Saudi Arabia, India, South Africa. All these countries don't want US dollars. And Saudi Arabia is already starting to take yuan and ruble for oil. And the only reason we're the reserve currency is because they said you have to trade in dollars. And if you have yuan and you want to buy Swiss francs, you have to take your yuan to dollars and then take the dollars to buy the Swiss franc, which is absolutely fucking ridiculous. How they let this system get out there are a bunch of morons. If I want to buy a franc and I got a ruble, I'm going and buy the franc. How many rubles do you need? Why would I need to buy a dollar? So they are getting rid of the whole dollar bullshit monopoly. And that's the end of the dollar because nobody will have faith in the government and nobody will want it because now the BRICS countries, the Russia, Chinas, came out with the dollar backed by gold and silver. Well, what dollar would you rather have? One that's being printed to nothing or one that's backed by gold and silver? Everybody would want the one backed by gold and silver because as we know, you can't inflate gold and silver. You can't print it. You can dig up some more, but you can't print it. Is that Canadian Club your whiskey you made? No, I worked there in the 90s. I'm like a senior financial analyst. My background is I have a master's in finance and economics. And I was working at Canadian Club. It was a great job. I loved it. Great people, great environment. They treated you like a customer, which most companies don't understand. And it was just a thrilling. I loved the work. It was one of those you're happy to go in Monday. So what they did was for Christmas, you had to spend $250. And the thought was you're giving this out for Christmas presents to your friends and family. Here's some liquor, and all you did was you had to pay your tax. So they gave you the $250. You just had to pay the tax because it was illegal if they paid the tax for you. So you'd go and you buy $250 worth of liquor. This is what I bought, and I kept it. It was my Christmas gift to myself, and it was like $15 at the time. And I just loved it, and I love the company, so I keep it. You won't find me driving a Ford. So anyway, so that's why I do it. But no, I didn't make it. Canadian Club. There's a plant in Windsor, Canada, which is where the headquarters were. I worked in the sales headquarters in Detroit. And I went on the plant tour. It was amazing how they do it. And they shoot it. Everything's mechanical. They shoot this. There's a little gun and it just fills it. It knows how much to fill and it puts it in the bottle. And there's something that makes the label and something that screws the top on. It's really fascinating. If you're ever in Windsor, Canada, take the plant tour. It's just unbelievable plant tour to take, like a whiskey, like a liquor company, how they make it. And it ferments and it smells to high heaven, but it's all sugar. And that's why you got to be careful with liquor because it'll kill you. The sugar, it's just really dangerous for your health, especially that's why diabetes is so high. Anyway, I don't sell it online. I don't think I would sell that at all. Maybe if I could get it replaced at the store, but this is 1997. So I think Target or Walmart has it if you want to buy it, but no, I didn't make it. I wouldn't know how. You can't just make this. This is something that it's a whole big vat and they make it. But no, it's really good. But I love Canadian Club and I love Hiram Walker. Unfortunately, they sold the company, I think, to Seagram's or one of those. Whoever owns 7-Up is the company that bought us in America. Allied Namek is the European company that owned us, but they didn't know how to sell to North America. So they sold the North America part of it. Their stock was really low. I don't know what the hell they were doing. There's huge margins. I used to do the margins also for them. So no, but it's a reminder of a real happy time in my life, and I keep it for the memories. But no, I wouldn't know how to make it, and I don't think I'd sell it. I don't think there's a price I would take for it. So anyway, so that's really what's happening. So let's get into supply demand. Supply demand glut is an imbalance. 3 exceptions to Say's law. Say's law is what I told you. What do the people want? That's what I'm going to make. So you're making what's demanded, not electric cars. Who wants? Is there a demand for electric cars? I don't think so. I don't want one. So they're making electric cars, but they're trying to force you by scaring you. Oh, it's hurting the environment. Is it really hurting the environment by me driving my car? Environment's fine. We're still here. The earth hasn't exploded. There's 3 exceptions to that. One is price discoordination. Prices are too high. Supply won't equal demand. Sales prices drop, supply equals. That's what I was telling you with the $20. The $20 steak is that example, right? Price discoordination. You're trying to sell it for $20, but nobody wants to buy it. Or the ribs at $40 for the slab at my barbecue restaurant. Nobody is. That's prices are too high. The prices have to drop to equal the supply. So you're always trying to get what the market will pay. You can't force the market to do this. If the market says, I'm going to pay $9.99 for a New York strip, and you market 20, the market says, no, you can only sell it for 9. Or the ribs, you want to sell them for 40, you can't. This is why the stock market's crashing, because as costs go up, so now the Toyota costs go up, the steel's up, labor's up, whatever's up, all the inflation, the electricity. And now they want to sell the Camry for $30,000. And I know, because I was in there getting an oil change and they wanted to, it's funny, I give the guy football picks for oil changes. Works out. So 30,000, but the market, I just paid 22,000 for my Camry. It's a 2018. I just paid it off. So that's the market's 22, maybe 23, 24. They want 30 because they want to get the prices adjusted for the inflation. But the market doesn't take that into consideration. So we don't say, oh, yeah, there's major inflation. So what I paid 22 for, I now got to pay 30. I'm not getting extra money. You're hurting the value of my money. So you want 30, but the market says, no. You can't get 30 for a Camry, because the market is here saying 22. There's your supply demand, right? The demand is 22. The market is trying to get 30. It won't. Prices will drop to equilibrium. So you'll have to sell it here, or you have to drive the market up. But who's got more money? And if I'm used to spending 22,000, why would I spend 30? Or if I'm used to spending $25 on a slab of ribs, why would I spend 40? Companies don't understand this. I have no idea why. And yet, then what'll happen? Their costs go up. They try to sell things over market, and they can't. So what happens? Their profits drop because sales drop because the market says, I'm only going to give you this. My costs go up to here. I want to make a profit, but there's no sales. What happens in the stock market? If sales drop, price drops. So the stocks are going to collapse because they can't sell over market, even though their costs go up. So what tends to happen? They lay off people to cut costs because they can't get the material is the material. I need steel to make a car. I need a steering wheel. I need tires. Well, if all those costs went up and it's more than market, I'm out of business. So I'm either out of business or I cut all my staff to get rid of everything, even though I need accounting, I need IT, I need to pay bills, I need to bring in money, I need engineers, I need all these people, but I'm gonna cut them all and basically cut out my thing. Basically, they need to go out of business. So as the barbecue said, well, if I can't charge 40, I'll have to close the doors. I go, you're gonna have to close the doors. I'm preparing you for that. That's what you're gonna have to do. Or you're going to have to somehow keep your price at 30, and you really can't cut. What cost can you cut? You have waitress staff that you pay $2 an hour for. You can't cut them. You got to serve the food. Your only thing you have is your energy and your food. So you buy your ribs. You got to plan on getting them cheaper. Or as I said, if you sell 13, you better sell 10. And then keep your price down because there's no way you're going to be able to go 40 because the market's here. Now, not a lot of people understand that concept for whatever reason. I don't think they don't want to go out of business, so they don't want to listen or whatever. It just blows my mind. But I tell my bosses, you're going to be closing the doors anyway. It's a small company. I go, you're going to be closing your doors in 3 or 4 months because nobody's going to want your product. They sell rollers. Nobody's going to want them because as you need money, the last thing you're going to do is buy this. It's not you don't need it to run your business. So they will stop selling. Sales will drop. They'll have to close up. And that's what they're going to do. Although the CFO doesn't believe me. And I just said, okay, well, I said, if I were you, I would sell these businesses and buy gold. And then you don't have all this headache, and you're going to make millions and millions of dollars that you spend on these businesses in gold. But I don't know what I'm talking about. And that really pisses me off is when they don't believe you. And I'm like, do you think I'm telling you a fairy tale? These are my notes from my master's program. Do you think I don't know? Maybe I don't know what I'm talking about, but certainly the teacher knows. He's a freaking Austrian economist. I think he knows. It's all proven out. Everything I'm telling you makes sense. So I don't get what, and when I tell people to buy gold and silver and dump their dollars and get out of the stock market, and they say, oh, okay. And then a month later, they don't, I get really pissed off because it's really disrespectful that you don't believe me and you're not trusting me. And I'm about the most honest guy you're going to meet. And I'm like, why the fuck don't you trust me? Do you think I'm making it up? I got gold and silver. I mean, I emptied my bank account and have gold and silver. Like, what the fuck? You think I'm doing this? You don't think I'm doing it to make money or to save because the dollar's going to collapse? And I know it's going to collapse. Vanilla, by the way, does he? Yeah, he still does, but I would try to reserve it. But if you got to wait till he'll have more in. He always has some. He owns 2 or 3 stores, Vanilla, so he'll have more in. Don, I hit with Raiders +7, baby. You are a smart professor. Well, I'm happy you did, Don. I think the best play in that game, to tell the truth, was the over, because watching the Chiefs defense, they can't stop the wind. And watching the Raiders, they don't have a defense, but Adams and Carr, who played together at Fresno State, are starting to get on the same page. And in the Buffalo game, and I'll get back to economics in 1 second. The Buffalo game this week, I'm going to play it over. Buffalo's going to score 50 on them, and you're not going to stop KC. Buffalo on the road is different, and Buffalo against like Tennessee and Pitt really lays it on. But what happened? They lost at Miami to that team, and they should have lost to Baltimore. They were down 20-3. So how do you just beat Baltimore and Miami and then you blow out these others? So you can't just look at the last game. You got to look at the whole picture. Where should I buy gold and silver from? I have my store. This store is about 3 miles away from me, and he's a gold and silver store, and he owns 2 or 3. This guy's real. He's not going to sell you fake gold and silver. You call him up, tell him you know me. Just use Howard and say, I want to buy. And he's I bought a 10-ounce silver. He's running out, and that's why I try to warn you. You can buy gold. Maple Leafs Cougarans yesterday were $17.90 for the ounce. The American Eagle and the American Buffalo were $18.90 an ounce. So buy the Maple Leaf Cougaran. Why pay $100 more when you're buying gold? You don't really give a shit if it's U.S. or Canadian. That's just the demand. The silver is so cheap. Now, I bought a 10-ounce bar I showed in the video yesterday because he didn't have any bullion. He had 20 Eagles left, but the Eagles were $35. The 10-ounce bar was only was only $23 an ounce. So I got a 10-ounce bar for $230 versus why spend $350 on the same silver that's Eagles, that's American. There's no reason for it. He had some other stuff in the showcase, some Austrian and some Canadian, but those were also $35, which made no sense to buy those because you're really buying the ounce of silver. So you call him up, he'll take a credit or debit card, but there's 3% charge to doing it because that's what he gets charged. Shipping's very cheap. No matter, like I was in Alabama doing a job for a while, $15 second day FedEx, everything came the second day. It was exactly what I ordered. He's a very honest guy, good man. So you can trust that you're actually getting gold and silver. And he owns 2 or 3 stores. So he's good. He's not a scammer. It's not like some kid out of his truck selling you fake Chinese gold or anything like that. You can trust him. That's where I buy. Does he ship it? I'm in another state. Yeah, I was in Alabama. It was $15 FedEx, and there's no sales tax. So the FedEx might have went up, might be 20, but it's whatever the real FedEx rate is, and it'll come out second day. So you'll get it, and you'll be happy with it. The question is, what does he have? I was in there talking. It's sort of like when I used to go to baseball card shows, and you'd start talking to the dealers. It's just a nice environment to be surrounded with gold and silver. And he only had a few ounces of gold left. He didn't have any quarters or halves. So like I said, at the time he had 7 ounces. He had 3 Eagles, a Maple Leaf, and 3 Buffalo, these new Buffalo Americans. And some guy came in and I told him, and he bought the Maple Leaf and I think 2 of the Eagles, or maybe 3. So there was only like 3 left when I left. And the silver, all he had are these bars. He didn't have, like I said, he had the 35, but he didn't have the $23 Buffalo rounds that you want to buy. So that's what you want. If you have to buy the silver bar, just understand you're buying 10 ounces. There's nothing wrong with it. It's just when it hits $2,000 an ounce, you're sitting on a $20,000 bar as opposed to coins for $2,000 where you could easily sell them. So keep that in mind. You do want some coins, but you also, if you're going to buy a lot, buy the bars anyway. And then what I'm going to do is take the bar and start buying gold with it once the prices zoom up. But silver will really go through the roof. So back to supply and demand. So the price discoordination I talked about, right? You want to sell the ribs at $40, but I only want to give you 25. So you got to lower your price. That's where we're the market, and that's where if we all stick together, they've got to lower their prices on everything, because if you don't pay for it, they can't, because whoever has it. So in other words, if this guy wouldn't pay for the meat and say it's too expensive and either find a different place or not buy it, the guy with the meat he'd be fucked, because he'd have all this meat he can't sell. He's going to have to put it on sale. So if all these places who are buying the meat from the wholesaler would get together and say, I'm not paying you, he can't sell it at that. So it's all a big game of what is the market? What does the auction say? So if he sticks to his guns and not buy it, then they have to lower the price, just like the New York strip for $20 a pound that nobody wants. They got to lower the price. That's why you see sales. Sales at the grocery store are based on the fact that they can't sell it. And they put it on sale, and then what happens? Everybody buys it. Oh, it's on sale. Now I can afford it. Now I buy it because I really want it, but I only want it at such a price. The second is entrepreneurial error. This is supply demand. So one was price discoordination. Prices are too high. Two is an entrepreneurial error. People make things that people don't want. It's a mistake. There's no demand. That's electric cars. That's a lot of what this government does, is they sell these stuff that nobody wants, right? In a free market with auctions, which is what we have, that's Austrian economics. You put a price up. This is $50. Am I going to sell it? Does people want it? Do people want my blue shirt? Yes or no? If they do, I'll make it. If they don't, I can't make it. I can't make this, and then nobody buys it, right? Only the government can do that. So that's a mistake. I think these electric cars are a mistake. They're trying to, I don't know what they're doing. They're trying to piss the oil companies off. Maybe it's a Russian thing where Russia has all this oil and they're saying, well, we'll use electric cars. We don't need your oil. I don't really understand what the fuck's going on. There's a product called oil that people put in their cars, and they're trying to say, let's get rid of it. So let's get rid of your car and we'll make electric cars. Does anybody want an electric car? No. There's too many faults. There's really no demand and no desire for it. Do I really want to save the economy, the environment? Well, I don't know. Does it really hurt the environment? I have no idea. I don't see a bunch of smoke here. I drive my car. I don't see smoke come out. I'm fine. I don't see what's happening. The third is unproductive customers. People don't pay. This is Russia's problem. Russia must be productive, and Russia needs private property. So there's an example of Russia. They're poor. Or China. This is communist countries. The people don't have money and they can't buy the product. So you're going to sell Canadian Club for $50, but you don't have customers. There's demand, but the price is wrong. And that's the third factor in supply demand. So in these communists, so China used to be that people would work in rice paddies and make $1 a day. They couldn't afford cars. They couldn't afford anything. Then they started making money thanks to Ford and GM. And then they started listening to Adam Smith. We are basically based on Adam Smith. That's the U.S. Free markets. Really, it's Austrian economic. It's the invisible hand. Let the market run. That's really how the U.S. was founded and why we're so successful. China went to Adam Smith. That's why they boomed. Russia never did. Europe did. England did. That's why Europe boomed, was they listened to Adam Smith, because his makes sense. Listen to the market. Listen what the people want. Make what the people want, and then figure out what the market is and what you're going to make a profit. So if you can sell it at this price, you're going to make profit. What are your costs? Can your costs be under what the market is so you can make profit? You can make your 10, 20% because the market's willing to pay, willing and able. And that's what's happening. So what's happening now is you're coming out with electric cars that nobody fucking wants, that we don't even know what the market is. I don't know. What do they cost? 60, 70,000? I don't want to pay 30,000 for a Camry. Who's got 60, 70,000 to buy an electric car? And by the way, when the battery goes, and that's $5,000, who has that? So what are they really trying to do? Get us away from cars. They're trying to restrict our mobility, right? The U.S. is a country of freedom. I can get in my car, go to the grocery store, go to the club, go to the lake. I can go to a game. I can go to the casino, but I got to drive there. That's my freedom. If you take that away from me, which is really what I think's the bottom line here, we're stuck in the house. We're all going to lose our minds, not leaving the house or just walking a few miles to the grocery store and back. What kind of life is that? And I think that's what they're headed to. I think China runs this place, and I think that's the communist way. And I think Biden's selling out to the communists, the Chinese, and I think that's what he's trying to do because he's out of his fucking mind. Why is U.S. so successful following Adam Smith, now wanting to do a 180 and say, let's go communist, let's go Keynesian, yeah, let's inflate the money, let's control all the people. What the fuck? Who's got this idea that we all know it's a bad idea? We all know it never works. What the fuck are they doing? It's unbelievable. What is supply? How do you produce supply? It's human resources, more productivity. I got a master's degree. That's increasing human supply. Ownership of non-human resources, plant, equipment, and machinery, so you can make things faster. If you're making whiskey, you got to have machinery and equipment to do it. You have to have a big vat. You have to get that and then make it, and then all this assembly line and everything else. And economic privilege, monopoly from the government, lobbyists suppress competition, and that's not good. That's the worst thing, and that's what's happening is all this lobbyist crap, which makes monopolies, which is all J.P. Morgan, which is why I hate that motherfucker. And that's the worst thing. We want an economy based on competition. Competition keeps costs down and quality up, right? Canadian Club they got to deal with Crown Royal. They got to deal with Dewar's. They got to deal with all the Scotch whiskeys. And they have to compete with them. So they got to make a product that's good at a good price. We're going to sell it cheaper than you, and our quality is going to be better. That's competition. Who wins? We do. We got a better tasting whiskey at a cheaper price. That's who wins. This way, Canadian Club pays to get all the competition out. Then they make a less good product and they charge $100. What the fuck is that? That's not economics. That's bullshit. And that's what we have here. What is the real rate of interest? So an interest rate is what the banks charge. So let's say 8%. If you have inflation at 6%, the real rate is 2% because you got to take the inflation out of the interest rate. Well, let's see. Interest rates are what now, up to 3%, let's say. Inflation rate, 20%. Your real rate, minus 17%. Who in their right mind goes into bonds, puts their money in a bank for CDs, does anything losing 17% on their interest rate? Now, Williams said about we're raising rates. All that's doing, because it's a debt world, raising rates makes the cost of money more expensive. It will not stop inflation. Inflation is not to be stopped because they keep printing, because they have to print, because as I said, the only way to pay the bills is to print for it, because you can't tax us at 100%. Nobody will work. So if I made $100,000 and everything went to tax, why would I work? I wouldn't. My check would be zero. So you can't tax us to death. As far as this tax the rich and middle class bullshit, you don't want to tax the rich because they're the ones who make the jobs, right? They own the company that we work for. If you tax them, they have less money to pay us. You don't want to tax them. Let them invest. Let them build things. Let them hire people. Nobody should pay income tax because income is not real. There's no such thing. It's all, we get paid because we supply a commodity. My commodity is finance, or in this case, football. So I give you football picks. How do you want to pay me? Well, you can pay me in gold and silver or money, but you can't pay me in oranges because it doesn't work. So, but that's not income. That's, you're paying for a service. I'm giving you a service and you're paying for it. Where's that income? It's not income anywhere. So why am I paying a tax on something that I got paid for in dollars? Because it's the only way I can get paid. So income tax is bullshit, should be abolished. It came along with the central bank and JP Morgan. It's all bullshit. Let's see. I don't want to get too technical. All right, so let's talk about the gold standard so people can understand it. The number one thing about it is there's no inflation in the gold standard because you can't fucking print it. Low interest rates. The economy moves. High and speedy economic growth rates with the gold standard. No speculation in currencies. The weight in gold is set. An ounce is an ounce, period. No foreign exchange risk. Is the euro changing? Is the yen, whatever. Disciplined governments. Aha. Find me a disciplined government that doesn't want to print the shit out of the money and kill everybody. Sri Lanka, Greece, UK, Euro, Germany, Japan, China, Russia. Name a country, they all fucking inflate because they all are not disciplined, and they think they can just print because they don't get the repercussion. There's always a problem. If you do things, there's always the other side, but they don't want it. They just want, I'll print money and I'll walk away with millions of dollars. What they don't realize is the millions of dollars aren't going to be worth anything because as you keep printing, you're killing the value of what you're printing. So let's say there's steaks, right? The New York strips are at the grocery store. Well, let's say there's just a few. All right. Let's say there's 1,000 New York strips. Let's say he got them on sale. The warehouse that kills the cows, nobody wants to buy at that price. So he has to lower the price, but he's got all this inventory. So he sells it to your grocery store. I got all this. I'm going to sell it to you instead of $20, $10. You go in there and there's stacks of New York strip at $10 because the wholesaler who kills the cow couldn't sell it at his price, has all this extra. That's a sale. And then we see it and then we buy it up because now you're back at market rates. And that's what happens. The disadvantage is there's no monetary policy set by government. So we don't need fucking government on the gold standard. As the price of gold goes up, the miners' production goes up. Floating exchange rates, well, I don't want to get into that. But that's why you have a gold standard. You can't get fucked. You have gold and silver. You have different denominations. You buy everything in gold and silver. There's no inflation. There's no interest rate bullshit. It's the reserve currency. That's what the reserve currency in the world should be. Everybody's going, well, the U.S. has to be the reserve. Nobody can replace it. Bullshit. Gold is the reserve currency of the world. Why are the Russians and the BRICS backing their dollar by gold? Why are the U.S., eventually the U.S., to survive, will back their currency by gold? It's the only way out for these idiots because they want to print it to death. And so, well, let's look at Bill Gates, right? I don't know, has he got $1 billion? Maybe. I don't even know if he's got that. I think it's just in Microsoft. What happens when his money's worth zero? What's he going to do? You think he's smart enough to buy gold and silver? No, he's a fucking idiot. He's an IT guy. No offense to IT guys, but what does he know about finance? So I'm sitting on $1 billion of US dollars. And now 1 billion times zero is zero. I got nothing. Now what are you going to do, fella? You're not smart enough to buy the gold and silver. Teaserking's family buys gold and silver. What's going to happen to us? We're going to be millionaires. because we got the gold and silver. That's going to go up because that's going to be it, right? As the dollar goes out to zero, because these idiots are printing it to death, we're going to be the ones going, thanks. And the reserve currency, we're going to be able to go to Russia or Europe, if it's still alive, or the UK, and go, I got a silver coin. I want to spend a month at this hotel with the coin. And I want to eat. Here's a silver coin. I want, the nicest things. I'm going to buy fur coats. I'm going to buy a nice car. I have an ounce of gold. I want the Ferrari. I want a nice $1 million home. Here's an ounce of gold. And you're going to be living the high life. That's what's going to happen, because as the dollar goes out, what happens to confidence? It goes out. So in 1930 in Germany, what happened? They printed and printed and printed, and nobody wanted the Deutschmark. They used it to wallpaper their walls. They need a wheelbarrow to buy bread and milk. What do you think happened to gold? Went through the roof. People took gold because they believe in it. They have confidence in it. It's been around since the freaking Romans, and probably before. It's accepted. It's, as I said, fungible. It's divisible. It's indestructible. Everybody wants it, and it's easy to give to somebody, unlike Bitcoin. So let's get into Bitcoin and gold, and let's go to this new topic. One other thing, gold is the ultimate inflation hedge. Buy gold when there is inflation. Now, why was that said, and why isn't it acting? I've already explained it. It's because COMEX is paper gold, and COMEX is being sold 1 million ounces of gold they don't have. If they actually had the gold they were selling, which is what it's like selling a stock without the shares. I'm going to sell 1,000 shares of Microsoft. Do you have any? No. Well, how the hell can you sell it? The whole thing's so illegal. It smells like shit. And yet, because there's kickbacks and all this bullshit, that people are letting it happen, because JP Morgan owns the Fed and he also is involved with COMEX. So what's he going to do? Put himself in prison? So he keeps getting his guys, just got convicted of price fixing, but nothing's really happening. COMEX is blowing up because there's too much demand for gold and the price is going up through the roof. So demand's here. So demand's here and price is here. What's wrong with that? The ribs will pay, the market's here and they want to charge this. And you got to come down to here. Gold, the demand is here and the price is here. Wait a minute. That doesn't make sense. The price has to catch up with the demand. Why isn't it? Because COMEX is keeping it down and the people running it. The U.S. does not want you to leave dollars to go to gold because they lose their power and they want the monopoly of printing dollars. But the rest of the world saying, fuck you. I don't want your dollars because you're ruining the value of it. You can't print it and devalue it. I don't want to get traded in U.S. dollars because it's got no value. It's just a piece of paper. I don't want it. I'll take gold and silver. So as the rest of the world says, fuck you, if there's no demand for a product, what happens? It goes to zero. So if I'm trying to sell Canadian Club and nobody wants it, I can't sell it. If the market says, I don't want this product, and we've talked about that, I can't sell it. I can make it for $40, put a $50 label, and it's just going to sit on the shelves. There's no demand. Well, that's the US dollar. Nobody wants it because they printed it to death. Its value's down. The prices going up are not inflation. They're the effect of inflation that these idiots on YouTube and all these salesmen, economists, or whatever the fuck they are, but they're not real Austrian economists. The price has got nothing to do with inflation. So the government's sitting there going, well, we'll get inflation down to 2%. What are you talking about? Well, we'll lower the prices. Well, that's not the inflation. That's the effect of it. Have you stopped printing money? No. Raising interest rate. Do you know why raising interest rates work, William? Before in the 80s when he went to 20% was because people then put their money back into the bank. And the banks could take the money and blow it up, and then the money supply shrank. You can't do that now because of debt. They're not 20%. They're raising it 0.75, which is destroying every other economy because they're all debted in US dollars. So now, let's say you're paying $1 million a month for the debt to the US. Now we just raised your interest rate. Now it costs you more. Well, I can't afford it. I can't print more euros because I'm inflating them. They're worthless. Collapsed UK, collapsed Europe, collapsed Germany and Italy, collapsed Japan, collapsed China, collapse every country that doesn't use gold, because India also, because now it costs too much. I can't print any more to pay you because the more I print, the less my money's worth. So what Powell's doing is not trying to handle inflation. He's trying to destroy all the other countries. Question is why? Why are we killing all the other countries? He's got to know, unless he's the stupidest man in the world, that raising interest, charging you more, you can't just come up with the money. As I'm saying, it's like the ribs, right? I can't pay $40 for the ribs, so I won't. Well, what Powell's doing is charging you $40 for the ribs, and you say, I can't afford it. So all these governments and all the other countries can't afford the increase, and they can't just print more money because as they do, the value drops. So now all of a sudden, like the rupee in India went from 79 to $1 to 82 or 83. The Japanese yen went from 138 to it was like 101, 102. It's now 144, 150. I haven't seen it in the last week. 150 yen to buy $1, and we're inflating the dollar. How much are they inflating? And then you raise the price of it by raising the interest rates. You're fucking everybody. Now, why are you fucking everybody? Don't you know you're fucking everybody? Your excuse of, well, we won't, we're going to stop inflation is bullshit. That's the professor, and that's the magic trick that the professor uses on my money heist. So this is the excuse, but it's not the reality. That's what we're going to tell you, right? We're going to tell you that we're fighting inflation, but we're really not. We're bankrupting all the countries. But we can't say we're bankrupting all the countries. So we're saying we're raising rates to do the inflation, which is why Williams don't buy the S&P 500. If you want to survive, you buy gold and silver, because I'm explaining their assets, their money. They're the only things going to survive, not the stocks. And I'm explaining why. So that's what you have. So you got this idiot just killing everybody. And, the only one that's smart is Putin, who says, you know what? Our dollar is going to be backed by gold and silver. And guess what? Their dollar was 140, is now 60. Why did their dollar drop? Because they're the only ones backed by gold. Oh, geez. Why don't these other countries backed by gold? That's why all the central banks were buying gold. Every central bank in Europe in the last year or two have been buying gold. Why does Russia own 15,000 tons of gold? Why does China own 25,000 tons of freaking gold? A ton is like 1 million ounces. So they are like real rich in gold. So what these derivative markets have done has backfired. You've made gold and silver so cheap that it's not at market, right? So the demand's here. The price should be right here. You've kept the price at $23 for silver. Well, what are these countries? They're not idiots. They're going, it's cheap. Let's buy it. This is $2 a bottle. Let's go buy 1,000 bottles. I mean, it's gold. It's money. It's value. So let's buy it. And they're buying tons of it. You know how much the U.S. has? 0. You know why I know? Well, we want to go into Fort Knox and see what you can't go in. Well, why would you keep me out? The only reason you'd keep me out and not let me see it is because you don't have any. That's it. 9/11 was a gold robbery. Don't get mad at me, but they stole billions of dollars of gold underneath the Trade Center. There was trucks seen loading it up, and stories heard. Now, was that all of 9/11 was? I don't know. But again, it wasn't for what was real. It wasn't a terrorist attack to blow up the buildings. That was the magic show. Look at my left hand while I get you with the right. So part of it was they stole the gold. The U.S. has no gold. I don't even know if it was the U.S.'s gold they stole or it was other people's gold that they stole out of it. But there was billions of dollars of gold stolen on 9/11. So when you put it all together, that's really what's happening with the gold and the prices and everything. So why is Powell fucking everybody over? Is he the dumbest man in the world running the Federal Reserve? Probably. He's probably up there because who would take that job unless you know what you're doing? So he's fucking. So just understand the world we're living in. These people are getting crushed, and then Putin with the energy problems, and now they're blowing up the pipelines near Germany. How are they going to get the natural gas to heat their houses? And it's going to be very expensive. What are they doing? So that's the real key. It's like the electric cars. They're saying it's for the environment, but it isn't. It's really about getting rid of trying to force you away from your gas-driven car. Why? Why do they want to bank? Now, if you notice, GM and Ford came out and said, we're not going to make gas-powered cars anymore. We'll make electric cars. Well, I'd sell those stocks in 5 minutes. Is there real demand for electric cars, or is it just the bullshit of the electric cars saving the environment? If anybody believes that, I got an oceanfront house here in Detroit where there is no ocean. Okay, let's see. The central bank is a monopoly on printing money, the only one that can print money. Enough said. That's a monopoly. That's the Fed. That's why we're in big trouble, because they can print and they're the only ones that print. Does that sound like a problem to have a fucking monopoly on money printing? Unbelievable. Let's see. Okay, so let's get into Bitcoin versus anything. Is Bitcoin as I described it? So does it have the characteristics of money? Qualities of the medium of exchange of money. Is Bitcoin portable? Well, you need a computer. You can't put it in your pocket. Is it scarce to keep the high value? I don't know. Can they make more? It's electronic. If it's overabundance, it loses value. Why does it have value at all? Don't know. Is it divisible for small exchanges? No. It's a Bitcoin's worth 19, 20,000. Is it fungible? Everything is the same, replaceable? No, because if you lose it, you can't replace it. Is it acceptance? No, there's no acceptance. I won't take it. I don't have a Bitcoin account. I don't know how to buy it or sell it. If somebody gave me a Bitcoin, how do I get rid of it? And it's all in money. And is it durable? No, it's not durable. It's not. You can't hold it. So the argument about Bitcoin and gold. So talking to the people in the hot tub and going, did you buy gold? No, I got Bitcoin. This is more at poker. So you go to the poker guys who all think Bitcoin's the greatest thing since sliced bread, and you go, well, what's your money in? What is your money in? Well, my money's in gold and silver. What do you got? I got Bitcoin. Why? Well, because the price is low and it's going to go up. Why is it going to go up? Oh, I don't know, but it will. What's going to cause it to go up? Do you think the inflation is going to make you run out and buy Bitcoin? Probably not. So the real fallacy of Bitcoin is it's not an asset. It's not money. It's not accepted everywhere. I don't know how to get rid of it. So if you were to give me a Bitcoin for football and it's worth, 20,000. Okay. How do you pay me for a week? My week's $100. How do you pay me? Do you pay me $100 worth of Bitcoin? Well, I need an account. I don't have an account. I don't want an account. So you can't pay me in Bitcoin. Therefore, it's not acceptable. It's not durable. The lady who lost her password can't get to it. It's really not divisible. I don't know. How would you give me $100? So is it divisible? Fungible, everything is the same. I don't know. And then is it scarce? I don't know. It says 21 million, prove it. And then, so I don't know. I know I can hold a gold coin. And then the derivatives aren't real, right? So I think it's a lot like the derivative COMEX. A guy sells 1,000,000 ounces of gold that he doesn't have. The price drops, but nobody's really buying. Nobody's really selling. It's all a facade. Who's buying and selling Bitcoin? Russian mafia, Chinese mafia, drug dealers, prostitutes. I mean, people who don't want their money tracked. But is the market behind it? Is there supply and demand for it? How is the price kept? Is it high or low? Does the market want it? Is it a malinvestment? Is it something that there's no demand for? So I don't really see demand for it. I really don't see a market for it. I really don't understand the price. I can't really use it. Can I go into Toyota? I know I can go into Mercedes with an ounce of gold when gold goes up and give them the gold, and they're going to give me a Mercedes. Will they do that with Bitcoin? No. So Bitcoin is not money. It's not currency. Bitcoin to me is a baseball card. Only you don't actually hold the card. So if we pretend this is a Tom Brady rookie card, I actually have the card. I can give you the card as I give you gold and silver, or if I give you $100. Now I can show you in eBay, this is a PSA 10 if it's graded. This is the value in eBay. It's worth $30,000. So if I go to buy something, can I give it to you for the product? Can I give it to you for the Camry? Will you take this for the Camry? Versus a Bitcoin versus gold. The gold you're going to take in a heartbeat because you know the value. The Bitcoin, you don't know what the value really is. This, I can show you what it is on eBay. Maybe you take it, maybe you don't, but at least you get something and you can hold it and go, it's PSA 10, it's Tom Brady. It shows 30,000 in an auction, which is everything is an auction. Will I get the 30, will I buy the car with this card? I will have a better chance with the card that's graded giving it to him than with Bitcoin, because if he doesn't accept it and what's the real value, Bitcoin could change in a heartbeat, and nobody really knows why the value has a value. Well, I can tell you an auction, somebody paid 30 grand for the card. I can show you the gold. You know what gold's value is? It's going to be on the Moscow exchange, not the London anymore. Hey, Sean, is it okay to share some possible conspiracies related to what you are teaching, Professor, not what you're stating things I've seen through research, saying that? Absolutely, Sean, this is a class. So pretend you're in a master's class. I'm the teacher. You have a question, go right ahead. I'm here to teach. Everything I do is a classroom, because I think most people don't understand this. They haven't been taught this, especially gold and silver, especially the economy, especially inflation. I'm watching guys on YouTube who have no fucking idea what it is, and everybody thinks it's prices and it's the currency. So go ahead, Sean, whatever you want. Anyway, back to Bitcoin. So it's only good if somebody accepts it. Therefore, it's really not money, because money is accepted. The whole key to it is the acceptance. I can go into Target and buy a chocolate bar and give them $5, and they accept the dollars for the candy bar. So they're selling so the whole basis of business for a Target or a Kmart or Kroger's or Toyota is I have inventory. Now I can either buy the inventory, I can buy the chocolate bar, or I can make the car. Either way, I've got an end item that I'm trying to sell, and I will take money for it. Now, the difference is that Toyota, who has 30,000 for the car, so I take out a loan. And the bank looks at my credit and says, yeah, we'll loan you the money. Toyota gets the 30,000, and then I owe the bank $500 a month for 2, 3, 4, 5 years and pay it off. And that's what it is. And I've done that. So Toyota got their money, but Toyota makes the product and sells it. Now, why would they take Bitcoin when they don't know what it is, and where would I get a Bitcoin loan? So if I don't have Bitcoin, I'm not going to, Comerica and saying, well, it's 30,000 Bitcoin for the car. Can I take out a loan for the Bitcoin? They would never be able to do that. A, do they have Bitcoin? B, how do they know what it is? And how do they know what to charge me interest on? And what will they get paid back on? What if it's only worth 10,000 at the end? And I borrowed it at 20,000. All of a sudden, they didn't get their 20,000 plus interest. They got 10,000. Now, in all offense, that's what they're doing now. When I borrowed the money and paid them back in inflated dollars, I won. I borrowed, the car was 22,000. I put nothing down. I had a payment of, what was it, like 500 a month for 7 years. I paid much more. I paid like 800 a month, paid it off in 3.5 years. But they didn't get 22,000 back. Let's say with interest, they were getting 24,000. They didn't get that. They get about 15,000 back. Even though I paid them back 24, it was in inflated dollars. So really they got 15,000. That's why interest rates go up with inflation, because if I loan you 20, I want to get paid back 20, like 22, right? My risk of getting paid back, if I want 10%. So if I give you 20, I want 10. I want 2,000 interest for, otherwise why loan the money out? So I got to make money for me to do it. So I want 22,000 for my 20. But in inflation words, I've got to then want 26,000 to get the same 20 I loaned you out, because what I'm getting paid back in is not 20,000. It's worth maybe 16 or 15. That's the only advantage. If you have a mortgage, you're ripping them off because you're paying in much cheaper dollars. And my advice is to do fixed, never do variable rates. Variable rates will always go up and they will always screw you. You do a fixed mortgage. I did a mortgage on our house when I was married. It was a $350,000 house. I locked it in at 2.5%. I could have got a variable at 1. I said, no, 2.5 or 3%. I'm locking it in. And then when the rates went up, I'm sitting there at 3%, laughing all the way to the bank, paying them back in inflated dollars. It was beautiful. About 9/11, one of the Bush brothers was head of security at the WTC Center. He stopped all the what? I don't know. You got to finish the sentence, Sean. It was all okay. One thing about 9/11, that he stopped all the bombing, sniffing dogs 6 weeks prior to it. First of all, I'm not even sure an airplane ran into it. I think it was a video, like a movie. Also, the building was detonated like the Stardust, or like how they detonate the dunes in Vegas, where you could see the blast lowering it. That's exactly what you saw if you watch it, the blast on each floor going off. Okay, that's what you see. There's no way a plane can fly into it, and then you're going to say, here's the magic app. Oh, it was the oil, the gas of the plane so hot it melted all the floors. Huh? No, the floors are not, they're not. First of all, talking to Lear on YouTube, he said you couldn't even fly a plane into it. In a crowded city like that, the odds on you flying right into the window is 0, and the plane would hit and then fall. The plane wouldn't go through, and then all the oil and gas is going to leak, creating the first floors of a 100-floor building to collapse. And then not only that, let's say it was floor 100. I don't know what 101, 102, whatever. Those people happen to all have a sick day that day. The offices of that floor were closed for a holiday. Did they know it was going to be there? The guy who owned the building a week earlier raised the insurance for terrorists. Who does that? Oh, yeah, I'm going to have a terrorist run into my building. Yeah, no problem. Let's raise the insurance for terrorists so I can get paid for the building. Did you know there was a terrorist event happening? Geez, I didn't know. But I thought it was prudent to raise the insurance on the building for terrorists. Yeah, right. It was all bullshit. It was all a detonation of each floor. You could see the smoke on each floor, and that's why it collapsed, just like the Stardust or the dunes in Vegas or the sands. And they'll go watch Ocean's 11. You'll see the puff and the floors. That's exactly what happened. It was about gold, as it always is. It's sad to kill people. Then there was a news report I was watching where they said Building 7 collapsed, and it was still showing, right? So Buildings 1 and 2 collapsed, Building 7 collapsed, but during the news report, they say, well, Buildings 1, 2, and 7 collapsed, and you can see Building 7 still up. And then about a minute later, Building 7 collapses. Well, no plane hit it. Why did it collapse? So there is other reasons going on. This is how our government fucks everybody over with these phony stories. And then it's a conspiracy if you disagree with things that don't make sense, which is such bullshit. But that's what I do, is I'm always the contrarian. That's why I'm good at picking football games. So if somebody likes, Kansas City and I like Buffalo, I'm going to stick with Buffalo. I'm not going to get my mind changed. And that's what I tell you. Once you make up your mind, stick with it. Don't listen to the news and the radio guys and ESPN and BetMGM where they come up with these stupid, their opinions on it. And then you get swayed into betting it. That's what they want. They want you to bet that because they need the action on the other side. Sean, yes, sir. I was a physics teacher. No way possible. Controlled them. Yeah, exactly, Sean. Interesting physics teacher. That's very interesting. We'll have to talk about that. Do you understand the Austrian economics that I'm teaching now? Or do you have any questions on that? Please ask me. This is the best class I ever had, was Austrian economics. I wanted to get a PhD in it, but I live in Michigan and they don't have a PhD program at the college I went to. I would have had to have gone to Auburn to get a PhD in Austrian economics. Can you freaking believe that? I learned so much here. It was unbelievable. So anyway, why does everybody follow Keynes? Because as I explained in the gold standard, you can't inflate it. You can't copy gold. So what ends up happening is these politicians are corrupt. They come in for the money. They don't give a shit about us. So they're here for the money and they can print it. And the Federal Reserve has a monopoly. Okay, here's your kickback. Go print us, $1 million, and we'll split it up among the congressmen and the senators. And then you've got all the lobbyists coming in for Coca-Cola, keep the competition away. And there's Coke and Pepsi, or the electric cars. I just don't understand. Again, there's no demand for them, but everybody's making. Ford and GM. Now, does that make any sense? Here, Ford and GM, what do? They sell cars. They're not going to sell cars anymore that are gas driven. They're only going to sell electric cars, but they have no demand for them. There's a lot of demand for their gas powered cars. What the fuck are you doing? Why would you not sell your gas, the Corvette or the Mustang? Well, you're not going to make them anymore. And you're going to make electric cars that you don't even know if there's demand for them. The batteries die and they cost a lot. The price is a lot. You don't even know what you can make them for. You can sell at market. You can sell your Corvette or your Buick or your Mustangs or your whatever crap Ford makes. You can sell those at the price, but you can't sell. How do you know what the electric ones are even going to cost if there's even a market and what you're going to sell them at? So you're going to take this risk and stop making your gas powered cars to maybe sell electric cars, and you're a car company? Does that make any sense to anybody? Because it don't make any sense to me. I was visiting this is Sean. I was visiting my sister. We went to one of the towers 1 month prior. Those buildings were incredible in their construction, steel, concrete, exoskeleton. Yes, makes sense compared to the pseudo whatever I learned in college. Yeah, I mean, there's no way a plane, first of all, there's no way a plane could have flown into it. Where was the debris of the plane? So if I'm a plane and I fly into a building, I only get the nose in. Then it crumbles, and then the whole back and tail collapse and would land on the ground. Where was that? Didn't see that. Where's the gas tank? Is it in the nose or is it in the back? I think it's in the back. I don't know. Somebody who's a pilot has to correct me on that. I don't know where the gas tank is on a plane. But there's no way the whole plane went through the glass and come out the other end. And by the way, the gas tank got into the building, created all this heat that caved in the first floor. And all the floors started dropping. Really? Are we that stupid? I mean, and then you wonder why there's conspiracies when this is the story they come up with, which is like, I'm going to raise interest rates to stop inflation, but I'll only do, inflation's about 20%. Well, let's take food and energy out. Oh, now it's 9%. Okay, let's raise interest rates 0.5%. That'll kill the inflation. Huh? What are you talking about? You don't even know what inflation is. It's not prices. It's the money supply. Period. Inflation is the money supply. I'll read the description one more time. It's very much important. I'm going to read what money is one more time because that's very important. Number one, it must be portable. Two, it must be scarce and high value. Overabundance loses the value. Three, it must be divisible for small exchanges. Four, it must be fungible. Everything is the same. Replaceable. Five, it must have acceptance. Six, it must be durable. Value equals the most marketable commodity. That's what money is. So anybody trying to tell you different, they're out of their fucking minds. That's the real thing. And then inflation is, what did I do with it? Inflation is strictly the increase in the money supply devaluing the money, period. That's what inflation is. You're printing, you have all these stakes. So if you look at the stake example, and I got in all these stakes, and I got to lower the price to sell them because I got too many in, it lowers the value on them. Too much printing lowers the value of the dollar. The prices are the effect. It now costs more to sell it because my dollar is worth less. So I need $100, but now you've inflated it. Now I need 110. It is not the prices that go up. It's the value of the dollar. So when a perfect example, and I love this example, in 1971, gold was $35 an ounce. In 2022, it's still 1 ounce of gold, but now it costs you $1,900 for the ounce. What's changed? Not the ounce of gold. 1 ounce of gold, still 1 ounce of gold. $35 is now $1,900. That's pure and simple, the best way to explain inflation, the easiest way, right? It makes perfect sense. I can buy an ounce of gold for $35, now $1,900. The only thing that changed is the value of the dollar. Is that inflation that the price of gold went from 35? It's yes. And what is the inflation? Well, it ain't the price of gold that went up. It now takes more dollars to buy it. That is the simplest explanation I can give you that I have thought about for years as what inflation is. So you must understand that. So when they talk about prices being 8 or 9%, it's all the inflation. And it's really 20% when you include gas and rent and food have gone up about 20%. It's not the prices, it's the value of the dollar dropping. That's your real inflation. The value of the dollar drops. Last statement was referring to your teaching compared to college. Okay. I try to teach to a level that is very easy to follow. I used to coach, and I brought this up before. I used to coach my daughters in softball, and then they went into fast pitch because that was just when I hit sixth grade, it was fast pitch. So when I got them at second, third graders, I'm teaching them how to hit, or I'm teaching them how to throw or something. They don't really know. And I taught one girl how to hit. She'd look at her bat, not the ball. And she couldn't hit, and I could see she couldn't hit. I go, "What are you looking at?" And she says, I could see her eyes on the bat. I says, No. You watch the ball. Then I could see the light go on, and then I could see her hitting the ball. And she hit it all the time. She was a good hitter once she understood what to look at. So that's my point, is I try to teach it to like we're all fourth graders, and I'm trying to make sure the lights are not, the lights are on, that we're not staring at the headlights, that the lights are actually on. So I try to teach that in football, but especially economics, which is taught as Keynesian economics. Most of us have been taught Austrian economics or Keynesian economics with all these stupid graphs and all these technical words that nobody knows what the fuck they're talking about. Bottom line is Keynesian socialist. It's communist. It's the government prints the money, the government looking at equilibrium when unemployment and this and that, and it's all bullshit. It's all purposely done like that, so you won't understand it, because they don't want you to understand what I'm just teaching you, right? I'm teaching you Austrian economics, which is really Adam Smith. It's free market. It's invisible hand. It's let us deal with each other. We don't need somebody telling us how to deal. We don't need taxes. We don't need regulations. If I fuck up, you don't buy from me. So I have to not fuck up. I have to be careful. I have to explain it properly. If I'm selling a product, you have to like it and understand it, and it's got to be at market. I got to sell the ribs at $20 because that's what the market is. You have to understand all that. So in my undergrad, I had Keynesian economics. I didn't learn a thing. I get to my master's and it's Austrian economics, and I'm reading my notes 20 years later, 1993, and they make perfect sense to me now. And how often does that happen in a class? And basically, it's just what the government doesn't want you to know. They fuck us all over between the taxes and the inflation. They're fucking everybody, right? You work hard for your skill set. The most important thing you can teach anybody, skill set. You got a girlfriend, you got a kid, anybody, your friends. It's all about increasing your skill set to make money and changing your skill set. So if you were working as with the old horse and buggy, and you were great at it, but then they came out with the car and nobody wanted, the demand for your horse and buggy went to zero. You have to change your skill to the car. And that happens. Now you change your skill to computers, and you got to learn Excel. You got to learn all these computer things. You have to keep your skill to what's in demand. But the higher your skill set is, where there's less people that do it, now you can make more money and you can survive, and it's very easy. So that's really what life is about, is making money. This working 40 hours and making the same, just how much money can I make in 40 hours and what do I got to do, versus I hear people, I work 3 jobs. Improve your skill set. If you improve your skill, you'll make more. You only have to work 40 hours. That's really the key to it. And then what do you do with your money? Now, what I'm teaching now is that higher level, saying you've got to put it in gold and silver, because I am seeing that the dollar, like Sean's seeing that there's problems and he's at the World Trade Center and he's seeing how it's made. And what I'm seeing is how the economy's made, and I'm going, there's trouble. Okay. I'm seeing the trouble because I'm trained in it. And I'm saying, with my skill set in economics from my program at a master's level, when you print money, what's the first thing I say? Where is it? First thing I say is it hurts the value. God, I keep doing that. Where is that? First thing I say is scarcity, high value. Overabundance loses value. That's what money is. What are they doing? Overabundance. What's overabundance? They print. The more you print, you're killing the value. It's supposed to be scarce. Scarce keeps a high value. That's why when you watch an old program from the 70s, go watch, any one of these TV shows from the 70s. Go watch Hogan's Heroes, right? And the guy says, oh, Coke's 10 cents. A hamburger's 50 cents. I mean, things are cheap. You go to the market, oh, it's 35 cents for mushrooms or blueberry, whatever. Why is it now $3-4 a pound or a quart or whatever? Because it's the money. So you've not kept it scarce. That's why before the standard of living was good. Now, so let's say you made 30,000 in the 80s and now you make 100 grand. You're not better off because it doesn't buy as much. And that's really the key. So what the gold and silver, what they're trying to teach you, what they're trying to sell you in Bitcoin is that it's money. And that's the scam. It's a pyramid scheme. They want you to buy it because that's the only way it goes up in value if there's demand for it. It's the ribs. The ribs are $40 and they're trying to get you to buy it. And you're like, no, I'm only going to pay 30. Bitcoin's at 20 grand. The only way it goes 30 is the demand has to go up. So they're trying to say this Michael Saylor, oh, buy it. It's gold. It's this. It's money. It's not. So the smart people are like, no, I'm not interested. And it can't go up if there's no demand. So Bitcoin will go to zero because it's not anything. It's maybe a baseball card, but I'd rather have a Mickey Mantle card than Bitcoin or a Tom Brady card, right? So gold and silver has been kept down in the value, the demand's here and the price is here. In the market, if we go to the market, if we go to the ribs, I'm going to pay this and the price for the ribs is down here, right? I'm going to pay $30 for ribs. It's $2. Does that make any sense? Why aren't you selling it for 30? If the demand's 30, why aren't you selling it for 30? Why are you keeping the price down? And as the demand for gold and silver shot up, because people like me are saying it's real money, it's scarce, it's money, it's got a huge demand, it's going to be around. It is the only hedge against printing the money, because as the money goes out, real assets go up in value. A Rolex, gold, silver, diamonds, anything that's real will go up. That's why people say buy real estate. They're trying to tell you, well, houses will go up, which they will, but houses have already gone up. So my friend in Alabama has a house he paid $150, he's worth $300. I wouldn't buy that now. It's already gone up because of the inflation. It's not going to 6. It's already done the rise. And what's going to hurt it is as you loan the money, you're going to need this high interest rate. People can't afford it. So what's happening is people are going to sell their stocks. They're going to sell their houses and their cars. There's a huge amount of repos in the car industry. So people aren't even going to have cars. And in America, you're really fucked because in Europe, you're okay. You can, if you're in Amsterdam, you're at a bike. If you're in Austria or some of these other countries or the Ukraine, well, when the Ukraine's normal, you get on a bus, you can cab, you can bus, you can take the little, subways, or you can take those electric buses that have the wires. You can do all that. You can't do it here. If I can't drive somewhere, I can't go to the club and swim, or, I'd have to walk 1.5 miles to the grocery store and then hope I can't carry too many groceries because I got to carry them back 1.5 miles. So that's where people are getting fucked. So they can't afford, you're not getting an increase in pay. As things cost more, that's why you buy the assets. The assets protect you. The gold and silver, as the value of the dollar drops, protects you, right? If nothing else, they protect you, because now those will go up. Those are like Oreo cookies, right? Oreos go from $3 to $5. Well, so will gold and silver, but they're keeping them down illegally by JP Morgan because they run the Fed and they want everybody to stay in dollars, because once the shit hits the fan and people understand the dollar is being devalued because they're printing too much, it's no longer high value scarce, it's overabundance. And once people understand that concept, which nobody does except for you and me, then they will get out and they will be a run to gold and silver, because they'll realize Well, right now they're in dollars, but they don't realize that like the yen, the UK, the euro people are buying dollars for safety. They don't realize the dollars aren't any better either. They're being printed. So as that happens, what's going to happen? They're going to start realizing that the dollar isn't the place. So then they put their money in the stock market. But as I've explained, the stocks are going to lose and people will need money. At the bottom line, when the shit really hits the fan, people will need money. So you're either going to sell your car, you're going to sell your house, you're going to sell your stock. That's what you're going to sell. What happens? As you do that and need the money, everything goes into gold and silver because that's been around since the Romans. Everybody knows that's assets. Everybody knows. Well, people in America don't know it, but the Russians, the Chinese, everybody over there knows gold, right? Why do the Chinese have 20,000 tons? Why does Putin have 15,000 tons? He's not an idiot. We all know he's a little bit crazy. He's not an idiot. He's got gold because he knows gold's value. He knows the U.S. is inflating. That's why he's backed his money by gold. So that's what's going to happen. So people are going to be selling. So you're going to walk in and buy a house with your ounce of gold because people will need the money. And you're going to store up on gold and silver at these ridiculously low prices. $23 an ounce for silver. That's going to be at least 2,000 to 3,000. Now, as I said, the correlation of gold to silver is about, let's call it 10 to 1. So when this is 50,000, this is what, 5,000? So, and silver is what, $23 going to 5,000? And I don't even know if this 50,000 is going to be right. It won't be priced in dollars when the dollar collapses, which is okay. Don't get worried about that. It'll just be the new currency and it'll buy you what the market will bear. And it's like I said, you're going to buy $1 million house with an ounce of gold. You're going to go buy a Ferrari with an ounce of gold, maybe a half ounce of gold, because people have it. They'll lose their value on it, right? So let's say you got 300,000 in the bank in US dollars. All of a sudden it's worthless. Now what do? You're fucked. So you got to sell your other assets. And what are you going to take? You can't take US dollars. So the only thing you can take is assets with value, a Picasso, gold and silver, maybe a Rolex. What are you going to do with a Rolex? Gold and silver, you can go because you're going to need to eat and you're going to need clothes and you're going to need to pay your rent and your utilities. Maybe, but I don't even know how that's going to work because it's basically won't be in US dollars. So that's where we're headed. So that's the problem with Bitcoin, right? Bitcoin, what is it? It's not scarce. It's not acceptable. I don't accept it. I don't know. Toyota doesn't accept it. You're not buying a car or a house with Bitcoin. Therefore, it cannot be money. Therefore, how the hell is it gold? It's not portable. It's not scarce. It's not acceptable. It's not durable. It's a computer thing. It's like saying a spreadsheet's worth so much money. The only reason Bitcoin's around is the Russian and Chinese mafia have to launder their money. That's what this thing is. And the only way you can go up is if they con you into buying it. Ask them, why will it go up? They can't give you an answer. They can't say, well, because the US dollar is going to collapse. Well, then why wouldn't I buy gold and silver? And yet, see, and the problem you've got to battle is you got to trust me and listen to me versus the news saying, oh, gold and silver, that's it. Look at the value at 1,700 on COMEX. So you got to be smart enough to realize COMEX isn't real. It's people selling gold that they don't have. I'm selling 1 million ounces. Well, I don't really have the gold. And then getting out of ETFs, getting out of IRAs. If you can't touch your gold, you don't own it and you won't keep it. So if you think you have money in an ETF and Sprott or SLV or GLD, you don't. You have shares saying you do, but there is no gold and silver in it. It's a pyramid scheme. This guy should be in jail, as I've said. So what you need to do is get out of that, sell it before it's too late, and go buy your physical. But my guy's already waiting 4 weeks for silver, but you can buy the 10-ounce bars, and that's what I recommend because that's all you can buy. he's got more expensive. He's got $35 Eagles and $35 Philharmonics and a few other silver ounces, but they're all at the $35 price. The rounds are at 4 over spot and the bar. All we care about, we're not buying it for the really investment. We're buying it because it's silver. So we're buying the silver. We're buying an ounce of silver. As long as it says 0.999 silver. And as I showed you yesterday on the show, I showed you the bar of silver and it said 0.999. It has a certificate of authenticity that it is silver. It says 10 ounces of silver on the bar. So I should have no problem getting rid of it as silver and getting the true value of it. What you're doing now is buying protection, and you're getting the kick where it's normally not an investment. You're buying money. So when you buy euros, you're really not thinking the euro value is going up. However, in this case, because it's been suppressed, because the demand's here and the supply is here, because you'll pay $30 for the ribs and they're selling them for $2, then that's really where the kicker comes in, right? It's going to go back up to 30. So the demand for gold is probably 10,000. We'll go to the demand level. That's why it's a good investment, but really it's protection of getting out of the currency before the dollar hits zero and you're left with nothing. You'll have the gold and silver, but you're getting the kick because it's suppressed by COMEX and it's really $1,700 an ounce. It's really 10,000. So you're going to get true upped to the real value, to the supply demand value, and then you'll have protection. So it's a double kicker here. But once it hits the value, then you're really not looking at it as an investment. You're just, okay, it's 50,000 an ounce. If you bought an ounce for 50,000, then it's not going to go to 100. You're not buying it for it to go from 50 to 100. Then it's protection. That's what Bitcoin is. People thought, oh, it went up to 50, 60,000 an ounce. It's going to go to 100. That was all fixed. That was all bullshit. There was really no reason for it. It will never go back up. There's no reason because it's not, at best, it's a baseball card. That's it. And people with their money are not going to put their money in Bitcoin. They'll keep their money in gold and silver, and they'll buy houses and cars and stuff like that using their gold and silver. Why would you put your money in Bitcoin? So that's really what is going on. Anything else I can educate you on? Let's see. All right. Yeah, so what the Romans did was called the basement. Nero started it. He burned houses of wood to put up marble. Sounds like Biden. Silver and gold was 100. Gold was 100% gold. Then it was less than 100. They debased it. Gold was less than 100% gold. That's the inflation when you're just with the money. So that's what the Romans did to them. They shot themselves. Let's see. If anybody wants the trade cycle, it's a 15-step approach, which I have right here. And we are at the liquidation phase. The liquidation phase is when you sell, cost-cutting, companies close and lay off. Then it goes to deflation. Banks have bad loans, fiduciary money down. Banks can't find willing and able to borrow the money. Banks can't find borrowers. And then the last is cleaning out process. Everybody tries to get liquid, businesses lay off. So we're real close to that happening. It's all caused by the Federal Reserve and everything else. Anyway, so that's our class. Let me see if there's anything else I can educate you with. It does a thing on presidents, and it says Eisenhower was for free trade, and then it gets to LBJ, and I just had idiot, corrupt, liar, took us to Vietnam, free trader, increased entitlement, inflation to pay for war, drug and crime increased. Somebody tells you LBJ was a good president, doesn't have a clue. And it's just amazing. FDR was like that. He was terrible. And Mr. Biden's the same way. Here's an interesting one on the fall of communism. Why did communism fall? One, John Paul II was the Pope, was Polish, was against communism. The Cardinal Wyszynski solidarity free elections in Poland. Poland was the one group that beat communism. Poor economic problems in Russia. Technologic revolution. The TV, the microchip, the communication and info. So everybody could see what was happening. Reagan got elected. The Afghan war, stingers were less expensive, shot down the helicopters. So we're using cheaper things, and we shot down all the Russian helicopters. And then economically, Star Wars killed Russia. So basically, Russia couldn't produce and had that. Eventually, they went bankrupt. That's why communism failed. That's why it always will fail, because it's government run and not the economy, which is what the fuck we got now. It's so sad because it's very easy to understand Austrian economics, and yet people want to run to Keynesian, and that's where they go. All right. How do you pay for a war? 4 ways. Taxes. There's no inflation and no debt. Bonds, there's no inflation and debt goes up. The fiat money, the banks print it, inflation and no debt. And if the Fed prints it, there's inflation and debt. That's how you pay. So wars are expensive. That's why most of these countries who were the lead currency, the France, the British, now us, why they go to war is beyond me. And it's expensive, and then it ends up costing them because they can't print it. And they all go bankrupt because they don't stay with gold. They were on gold. That's how they get rich. The French, the English were on gold, get big. Then here comes wars. People want their shit. They then get off gold so they can print more to have an army and a navy. And then they end up going bankrupt because they get into debt because you don't make money with war. War costs you. There's no revenue stream. So it's just cost. Then you tax, which hurts. And then there's no growth. You end up that. Well, where are we at now? Military spending. So what's going to happen is I'll have to cut military spending, because how do you keep paying for the military? So you got to keep printing money for the military at least, right? So there's no way they're stopping the printing presses, and there's no way they can keep doing the interest rates, as they've already bankrupt everybody. So I don't know what else they're doing. They're trying to bankrupt us. Great government. Paul, you're the man. You're trying to fuck your own country up. What is that? Who does that? What is this guy out of his mind? Good God. Anyway, that's what we're dealing with. There was a comment I read where we didn't need to have World War II. Here's an interesting tidbit. J.P. Morgan got us into World War I so he could sell arms to both sides. Brilliant. It's that movie Part 2, the Sherlock Holmes #2, where the bad guy sells arms to both sides. The Smoot-Hawley Tariff Act, which is a tax increase on imports, caused the Depression, trade implosion, major reason of World War II, lets the war parties come into power. The New Deal was no free trade, increased regulations, off of gold, increased taxes, raised government spending. That's FDR. You can't fuck with the economy. You've got to let us do our thing. Let the free market work. When government gets involved, and that's what the invisible hand is, stay out of it. Nobody sits there, me and you doing our thing. Nobody's telling us what to do or say. When government gets involved, this is the problem, right? They raise regulations, which cost. They raise taxes, which cost. They do goods that aren't demanded, which cost. Electric cars, does anybody really want them? I don't know, but I don't want one. So why, at least give me the option of buying the gas-powered ones. This is This is what fucks everything up. Why World War II, the Smoot-Hawley Tariff Act, and the London Economic Conference never handed. The London Economic Conference was to restore trade, which is free trade, and stabilize currencies. That never happened. That's why World War II happened. Then I have a note on we never should have got into World War II. I got to find that note. But anyway. So anyway, that's Keynes. Just think of Keynesians as socialist. Again, Keynesians want savings. Savings is a leakage. They want to limit the output. Output goes up. Prices go up. Savings is a leakage. Investment comes from spending. This is Keynesian, right? They want savings to go up, consumption drops, and this is what they think. If savings go up, the consumption drops, the investment drops, the output drops, the income drops, and the savings drops. That's what Keynesians don't want us to save. It's insane. The Austrians do. They want consumption down. They want savings up, which lowers interest rates, which raises profits, investment, output, and income. So if you just can remember those two things, or I can email them to you if anybody wants them. That's what it is. See, so they don't want us to save. That's why interest rates have been zero. They want zero unemployment. They just want us to work for the productivity and the output. But we need to save because it allows, that's how you grow. We save, the banks lend out our money to other businesses. This is why you don't tax the rich, because the rich sits there going, what do I put my money in? I don't want it. Why put it in the bank and make 2 or 3%? I can own a business and sell Canadian Club and make 20%. So that's how the rich think, right? Well, normally, I want to make 20% on my million, not 2% in the bank. I buy a company that I can make 20% on. And that's why I'm saying, so let's say the barbecue place, the guy was rich and he says, let's go make a barbecue place. We'll make 20%. And what I'm trying to tell him now is you're not making your 20%. Your costs went up, but you can't pass them on because the market won't allow you. The people who come here and eat, who want the ribs, are not going to pay $40 for ribs. I know, I'm a customer and I won't. Okay. There's no way I'm going to pay for the ribs. I will give you an ounce of silver at this price for the ribs, but now when it hits $2,000 an ounce, you're not getting it. He will take the ounce of silver, by the way. He'd be happy to take that in lieu of payment for the ribs. But so that's basically what it is. He has he has $1 million. He opens the restaurant up. He thinks he can make 20% on it. But as his costs for the ribs go up and he can't pass the cost on, he can't charge 40 because the market, at the end of the day, the market controls everything, which is us. Say's law. We control everything. That's what Say's law is. I'll pay $30 for ribs max. That's it. So if you charge 40, I won't buy it. If you charge 20 for New York strip at the grocery store, I won't buy it. That's how the market works. So if I'm rich and I want to make 20%, I can sell ribs at $25 and I'll make 20% on it. But as my costs go up, now I can't make 20% anymore. So now he's sitting there making 5% because now the ribs are $30 and demand has dropped. Quantity sold has dropped. He's not making his 20%. Maybe he's making 5%. Maybe he's making 6%. Is it worth it for him to stay in business? Because the initial reason he got into business was to make 20% because he's got $1 million and he doesn't want it in the bank, especially the last 10 years. So the bank gave you zero. So what do I do if I'm a millionaire? What do I do with my money? I don't want to make zero in the bank. I got to invest it. I don't want it to just sit in the corner. So I'll put it in the stock market. That's what's been happening. And all these billionaires are because the value of the dollar's dropped. So $1 billion's nothing now. $1 billion is what $1 million used to be. Let's go back to Hogan's Heroes where it was 10 cents for a Coke. That's what so you never had a billionaire then. Now you do because the value of the dollar is destroyed. And so you're rich. You want to make money. I'll buy a business, but then taxes and regulations, I don't know if I can make 20%. You get an Amazon, you get a Apple. Oh, I'll have iPhones. So everybody will own a phone instead of a home phone. And okay, that works for a little bit. Now what do I do? And that's why you jump out of the stocks, because they won't make the 20% anymore. And then you start closing the business, because I'm not in business to lose money, right? I got $1 million. I didn't go into business to lose money. I went into business to make 20%. If I can't make the 20% anymore, all right, I'm down to 5%. Do I want to stay in? Is it worth it? So that's where I was working, the guy's buying all these small companies and he's trying to make money on it. And I'm laughing at the guy. Basically, I'm gone. I'm not there anymore. And basically, I just laughed at the guy. He says, so what you should do, instead of buying these little companies and trying to make money on them, and it's like buying a warped house and you're trying to fix it up so you can make money on it. I'm like, just buy gold and silver. And buy gold and silver, sit back, and you'll make 100 times the money you're going to make in trying to fix these businesses up. But obviously, you don't understand Austrian economics, and you're not smart enough to ask me, who it clearly says on my resume, Austrian economics. You don't even understand what it is, and you're in business. This is the problem with business now. You got a bunch of idiots in it that don't know what they're doing, that are doing the hard thing. This guy with the restaurant should sell it and buy gold and silver and sit back. The problem is nobody thinks gold and silver is going to go because it hasn't gone because of COMEX. What they don't realize is COMEX is broke. Russia and China have now come up with dollars backed by gold, as all the BRICS countries. Gold and silver is about to go through the roof, and it's the only way to survive. And if people understood that, they'd get out of business and they'd just buy the gold and silver and kick back, and that would be it. They wouldn't. You don't need to work. This is your job, holding gold and silver, finding a safe place. So so it's okay. So if I'm owning the restaurant and I'm a millionaire and I want to make 20% of my money because I don't want it in the bank earning 3%, paying taxes on it, I have it. But once the restaurant doesn't return the 20% because my cost of the ribs go up and I can't pass it on to the consumer. The guy coming in, it now costs me $30. I need to mark them for 40, but wait, nobody will buy them for 40. What do? I can't make 20%. I can't make anything now because my costs are so high that I can't make any money on it. So what do I do? And that's the whole point of it. You got to get out of business or figure out a way to sell them for the 30, but will you make 20% on it? So as your costs go up because of inflation, you've got to change your whole way of thinking and buy assets that will go up as the value goes down. Right now, you're eating the extra costs. So as the inflation hits and the prices go up due to the money being worth less, you can't make your 20%. And this is why you get out of the stock market. It won't. Who's going to be there? Who in their right mind is going to stay in the market that you can't earn 20% on? Maybe a Costco, maybe Coke and Pepsi can still make it. But I'm seeing Coke and Pepsi 2 liters for $2.99. I mean, I don't drink a lot of pop anyway, but I'm not spending $2.99 on them. You got to be kidding me. Why would you spend $2.99 on Coke and Pepsi? It used to be 99 cents. That shows you that. So now Coke and Pepsi, if your costs went up that much, are you really making money? And your sales, I'm sure, are down because who's going to pay $2.99? Those are the only companies that can survive because they sell a product that you don't really need Coke and Pepsi, but it's $2.99. It's like not a big deal. Not like a $30,000 Camry. I can almost assure you Toyota will be out of business as well, as all the Japanese companies will, because they can't afford it. Nobody's going to pay 30 grand for that. They don't have it, and there's no interest. There's no demand to pay it. So as you're rich and as you're making 20%, and as that 20% drops to 10, 5, 0, you get out of it. There's no reason to own a barbecue place that you can't make your 20% on. Why should you make 5% on it? Just sell it and buy gold and silver. That's all you need to do. So that's really what's going on. That's really the key of why rich people shouldn't pay taxes, because they do the hiring because they want to make 20%. But if you tax them to 20%, that's 20% they can't invest. So therefore, they don't open the restaurant because that extra money goes to taxes, and they can't hire people, and they can't serve you, and they can't have competition, and then you can't get ribs for $25, $30. So that's why you never want to. The rich should never be taxed. You should tax sales, but never income, because first of all, income isn't real. But sales tax, then whoever spends, then you get the tax there. So a rich guy who buys a nice yacht, you're going to get the money there. But he's going to open up a business and put in all these costs and not pay any tax or very little. Especially now, he's not going to have earnings. So that's the problem with it. It's passing the cost on. It's the guy who wants to make 20%, who isn't, is going to get out of business. He's going to close the doors. Well, that's what you need to do, because you can't make 20%. You can't still make it, because people aren't going to be able to afford your increased cost. And how else are you going to make money if your costs go up and you can't pass it to the consumer, which you can't? Very few things you can. The electricity, you need a place to live, but you can move to a different place, or you can move to a different country. Go move to Portugal or South America or some of these other countries where you can do that. So that's what you have. Anyway, so that's class. I'll look for more interesting stuff. Here's a neat one on inflation. So there's 4 different inflations. There's repressed, which is wage and price controls; creeping, which is 1% and 2% every year, which is what the government wants; latent, which is an increase in the money, which is a cash crunch; and 4 is imported. All countries are fixed to one country, which is what we have. I won't get too technical on you. And the last thing is stagflation, is inflation plus unemployment. High inflation, high unemployment, and it's really a bad thing. Hyperinflation is more the fear of the inflation more than anything else. So if you're scared that the inflation is, and you run out to buy tuna now because you're afraid the price is going to go up, that is hyperinflation. There really isn't hyperinflation isn't printing more and more and more. It's the people getting scared. That's what Germany had. People would get paid on their lunch hour, run to the store, buy more, then get paid at the end of the day, run to the store and buy, and the prices are already up. That's hyperinflation. It's fear of the money. Sean, those opposed to Federal Reserve were on Titanic. I don't understand, Sean. Those opposed to Federal Reserve. Are you for the Federal Reserve, or are you against the Federal Reserve? Or are you just talking in general about the movie? We shouldn't have a Federal Reserve. It creates the trade cycle, and it creates the inflation, and it prints the money that kills everybody. And the taxes are part of the Federal Reserve, the income tax. So can you explain your last statement? I don't quite understand it. Those opposed to Federal Reserve are on Titanic. I don't know. Sorry, Sean. I'm not quite sure I understand your statement. Can you elaborate? But the Federal Reserve is really bad. It's really a terrible thing. And it really causes all this, causes crime, it causes bankruptcy, causes inflation, causes high taxes, which cause people all their problems. Anyway, so let's wrap the show up. It's a nice class, 2 hours. www.teaserking.com. I put up a few locks already. I put up a lot of college picks. I'm waiting on some injuries for college. We got the Oklahoma quarterback, not sure. We've got the Alabama quarterback, not sure. We've got the Oregon State quarterback, not sure. I think regardless, I think Kansas, I like Kansas's line went up because Kansas's quarterback's out. But what they don't realize is Kansas backup lit up TCU and is just as good as their starter. So the line went to 9. And if Gabriel doesn't play, even if Gabriel plays, their defense sucks. TCU put up 60 and then Texas put up 49. I'll say it again. Those opposed to Fed Reserve are on the Titanic. How do you feel about Navy plus 25, UConn? UConn's got some injuries, and I feel UConn, they've been playing better, but be careful of those injuries. Navy, I don't know. Who's Navy playing? I haven't gotten to the point where I know the games by heart. I usually do soon. So let's see Navy. Let me find them. SMU. SMU's pretty explosive. Let's see their defense. Oh, it's a Friday night game. How'd you get 25? The line's 12.5. And I don't think the line went from 12.5 to 25. Oh, so you're playing a big teaser. Yeah, big 4-team teaser. Yeah, I don't know. SMU is very explosive. Navy scored a lot last game. Has Navy changed? Are they better? I don't know. I know SMU is going to light them up because that's what SMU does. So I really don't know that I think I'd play Baylor in the 10 before I'd play Navy in the 25. And, I can find a whole lot of better games than Navy to play because I really don't know what Navy is. But let's take Clemson in 7 or whatever. What do you get, 10? Take Clemson in 10 or whatever. Just got those two. Or are you playing, what is this, a Friday teaser? Thursday, Friday teaser? I don't know. Let me try to understand you, Sean. Those opposed to Federal Reserve are on the Titanic. So the Titanic crashed, Federal Reserve's crashing, maybe? I don't know. It's over my head, Sean. I need a little more explanation. Just got those two left. So I see. What are you trying to I'm not sure what you're looking for. How many games are you playing? Well, you're playing a 4-teamer. So I can give you better teams than I don't know if Navy and do you want to mess with SMU? I don't know how good Navy is. I mean, they play Air Force tough, but I don't know. That's a tough one. I would lead you more to Kansas in 20 points before I'd lead you there. Can you play the pros like that? I can give you a whole list of pros getting 10, 13, whatever points. Go over in the KC Buffalo game. Why don't you do that instead of the Navy? If you can, I don't know what you're really doing. I know these 14, 13-point teasers, but that's about it. All right. I think that's about it then. Tomorrow I'll do college, so I'm pretty much almost done studying it. I got to look at the injuries again. It looks like the Arkansas quarterback is playing. It looks like Kansas's first stringer's out, but their second stringer is just as good. I still don't know if Gabriel is playing, but based on the over-under going down and the line moving, I think that was all Kansas's part. The Alabama quarterback, I got to believe he's playing because that's what Saban does, but he's hurt his shoulder, so how he's going to do. But Tennessee's going to give them all they want in this game. And Oregon State quarterback out. Kentucky's quarterback, we are waiting to hear on that. And Yeah, that's about it. Two big locks up so far. And I have a hunch on a few more. So once you get the quarterback, I could have more locks, but I don't want to lock it without the quarterback. Like if Oklahoma's quarterback plays, it's going to be a lock. If he doesn't play, it won't be a lock, but it'll be a big bet either way. All right, Sean, any more like what the heck you're saying with the Federal Reserve and Titanic? Or are you just saying in general, the people that oppose the Federal Reserve were on the Titanic and that's why it crashed? Don't know. Send it. Send it. All right. All right. www.teaserking.com. You get my email if you have any questions or comments or want to play a teaser with me. I give you the picks. I get 20% for the picks, and then we win. I've hit 3 5-team teasers and just missed one with Alex last week on a 10-teamer. We lost the San Francisco under, cost us a 10-team teaser. Just that. So anyway, I guess that's about it. So I hope you enjoyed economics. It's really the market. It's really prices dictate everything. It's all an auction. And it's best to be the invisible hand and keep the government out of the regulations and the monopolies and all that crap. That's what kills it. All right, everybody. Have a great day. I will be back tomorrow with college. And again, www.teaserking.com. John, just send me an email so I can understand exactly what you mean with Federal Reserve and Titanic if you want, or whatever. But if you want to communicate, you can do it that way. Okay. Thank you very much, everybody. Have a great day. Thanks for attending the class.